before we get into the detail. And, just a reminder, today for the first half of the show, we're going to tell you exactly what you should do in this market right now. Let's start with the implied open, first of all, to set the pace for what you're going to expect today. And like Samina said, you have a very, very unusual screen this morning. You have 800 points up on your Nifty implied open. Now, what has caused this? Let me just set the stage. And I'm sure a lot of numbers have been consumed over the last few days. The poll of polls, the basic numbers. Let's pull up those for you, because that really is the reasoning that you have seen this. You have two major polls which have, I would say, relatively the best track record, saying that you could see 400 seats on the upside. So that's Axis My India, CNX, even Chanakya talking about a 400 figure. See, the lowest figure in all of these, and we've selected, say, the top 7, is 358. That's the most conservative view. Now, in 2014 and 2019, exit polls were actually underestimating what the final result is, which is why 400 par, which seemed so unusual all of this time, or, a bit of a question mark for the market, today seems like a definitive.
Yeah, and I guess it's going to be a very tough market to trade, right? And I think that's what you want to keep in mind. If you went out and bought on Friday, you'd be extremely excited this morning. What if you stayed on the sidelines, which a whole lot of people potentially could have been on the sidelines? Of course, if you're an investor who's doing staggered investing, this shouldn't mean anything to you, because all you do is continue and stay the course. But if you were a trader waiting for the Nifty to give you an opportunity on Monday, unfortunately, that's behind us. Also, all those numbers that we've seen on the screen when we look at F&O data, so you've seen levels of 22,500, 23,000, 23,500. That screen is now completely gone out of whack. Yeah. You're now looking at 23,500, you're looking at 24,000, which is what we actually saw 2 weeks before today is when 24,000 saw active call OI. Right. That went off on the back burner last week, but anybody who did that would be laughing their way to the bank this morning, right?
So you guys remember when we had done that piece a few weeks ago with Amitabh Tiwari on what is the road to 400 looking like? I don't know if you recall.
Yes, of course.
And if you see what has happened, and I'll just before I come to you, Niraj, just give you the quick, sort of my take on the political sort of outlook on the exit poll and what has worked. Now, what he had talked about as the pathway to 400 is exactly what the polls are showing, which is that your strongholds for the BJP and the NDA have been retained. That is the north and the west part of the country. So if you look at those top takeaways, number one, now because of these polls, 400 par is a distinct possibility as per two major posters, no big question over there. The BJP is comfortably poised to beat its 2019 tally as per polls. Remember, come Thursday, Friday, that was the big question. Would they top 303? Would they be, on their own above 272? That in hindsight now seems like what was everyone talking about? Now, and this is the part where I'm talking about the road to 400 par. The west and northern part of the country where the main seats or the stronghold has been held on, but major inroads in southern India, in eastern states as well. So, Odisha, the whole bet on taking on BJD and Naveen Patnaik going it solo has worked. Andhra Pradesh, major gains expected. West Bengal, the numbers are astonishing. In a couple of polls, they're seeing the BJP get more seats than the TMC in West Bengal for the first time. This may be the first election where the BJP could have an MP in every state in the country, including in Kerala and Tamil Nadu. So those are the kind of gains. And of course, with the disclaimer that these are not the final results, but the chance of all of this data being completely wrong is very, very unlikely. One doesn't see how that could happen.
Yeah, so many people have spoken yesterday about whether the exit polls are truly too optimistic. You reckon that chance of all of this becoming low is very unlikely?
Because in 2014 and 2019, they were underestimating what has happened. And you have now, the way exit polls are conducted, you have agencies which are doing weekly surveys for at least the last 8 months. So they already have a pulse on what's happening in every seat. Then on the exit poll days also, there is now scientific sort of method. You have some teams with over 1,000, 1,500 people for agencies who conduct these polls. And data analytics has improved massively. So when the stakes are so high, could they go? I mean, anything can happen in this world, but the chances of them,
probability.
The probability of everyone getting it wrong
is unlikely.
Is very unlikely.
Well, I'll tell you what will certainly happen today is short covering. So, independent of whether this turns out slightly different tomorrow or no, for the better or slightly lower, who knows? But frankly, for any person who's gone short, and that's the part of the trade setup today, right? That one, that we know that there were shorts out there in the system, but just the fact that the long-short ratio was at 12.87%, guys. With that kind of extreme short position on the FI side, even if you're not an FI and you had small shorts in the system, you will be forced to come and cover today. So, one, that the market will start off gap up. You haven't had a chance to cover that. And two, whether you cover today, whether you take the risk and cover tomorrow, because who knows, the markets may be even higher tomorrow. And the calls that you've written and you are way out of the money are even more expensive to cover tomorrow. So, I'm just thinking out that if I was somebody who's, for the hedge as well, gone out and done a short call or written the calls of 23, 200, whatever you have, will I have the gumption to stay on my position for 2 more days? Because the very high probability that while exit polls and the poll is suggesting 365, as Tamanna said, 2 of the most believable or followed polls are also suggesting NDA 400.
Yeah.
And if that were to happen, will the markets be even higher than what I'm seeing today on the screen? And therefore, should I come and cover? And therefore, the other question is, normally people say, don't go out and chase gap ups. My question is, and I don't have the answer, we'll ask our guest today, but my question is, if there is a gap up, right, 800-point gap up as the implied open is suggesting, can short covering actually lead the markets even higher from there?
So if you've got to quantify the Niraj, I believe if you've got to go out, 3 lakh odd crores is what FIs are currently sitting on in terms of short positions. If that 3 lakh crores needs to be covered, the Nifty could see 1,000 to 1,500 point up move to quantify that. So gone 24,000, you're looking at 24,500 if every FI comes out and looks at short covering. There could be basket buying as well, which again could be pushing pressure on the bears who are sitting on the sidelines. And also, you know, while we talked about, this is also important, and given the context, right? If you look at what's happening in India versus what's happening to global leaders, they are facing anti-incumbency challenges. Modi has proved that he's come in 3rd time with a landslide victory when his other peers, the US for example, or any other country, is really struggling with holding government there. Bank Nifty, I think that's going to be an exciting one too. 50,000 on Bank Nifty. Could we put a bet on this?
Yeah, I mean, no.
I think
you can't.
Who wants to put a bet that is not going to happen?
Neeraj said you can't. I don't know whether he's saying you can't.
I'm saying you can't lay a bet on that. Simply because, I mean, if FIs are forced to cover, where is it that they'll cover?
Banks.
And then where will they build the longs? I mean, the cheapest space out there is private banks. Here's a statistic, guys. YTD, and those 2 charts will come up on your screen. YTD, the Bank Nifty. Okay, let me put it this way, actually. Let's show the YTD chart of the PSU Bank Index. That's up. Okay, we've shown Nifty Bank, 1.43. The PSU Bank Index is up 28%. YTD. Bank Nifty's underperformed PSU banks by a country mile, right? So imagine where the short covering and fresh long position will come in.
You know, Niraj, I think the wisest trader on the street was the one who made these bets 2 weeks ago when the Nifty hit that record high, when Bank Nifty was in kissing distance of 50,000. There were trades that were underway. Then there was nervousness that followed in the last week where the Nifty actually declined 1.5%. So if you had stayed put, only if you had stayed put, you would be bearing the fruit of all that effort and risk-taking ability that you exhibited this morning. It's going to be exciting. We will see that 800-point gap up. Now, do people take profits off the table? And then does the market stabilize for most part of the day? Is it buy the rumors, sell the news? So tomorrow when the exit poll comes out, will we again see a 5% up move? When the results come out. Those are also going to be important dynamics to play.
I just want to put out a lot of notes since yesterday, but just this bit from Bernstein that caught my eye. So I'll just put that out. It says that given that the exit polls translate into results on Tuesday, so that means if they do, exactly your question, a continuation of the relief rally can happen with the market touching 23.5 briefly, 23.5 for K on the Nifty, before profit taking before profit booking takes over, a greater margin of victory with seeds going into the 380, 390 or above range can increase the magnitude, but not the duration of the rally. So at least as far as Bernstein is concerned, 23.5 is you're saying up ki bar 24,000, but 23.5 is their upper cap. Talking about up ki bar, I just want to remind you, Niraj, that when we launched and on our launch event, we talked about Nifty up ki bar all the way to 50,000. And it seemed at that time, I remember we had a conversation. I was like, 25,000 kar do. And you said, nahi, 50, because 25 to is.
But that's Niraj is going to buy India for the next 5 years. That's all you need to do.
But whoever did that is today smiling.
And if you haven't done that, if you're a new investor coming in, you still have that 5-year runway. Was it Prabhudas Leeladhar who had put out a target of 25,000 and
yes.
most people shunned it,
so
to be honest.
came and said that before June 24,000. Right? When we were at 22,200, Rahul Arora was on our channel. Prabhudas says that rightly. But Samina, you are absolutely right. I mean, I think all of us are saying the same thing, but just spelling it out. If you are a longer term investor, and if you do not have Manish Dangi yesterday was on the channel, and he has options of investing in Japan, US, Germany, bonds, everything. But for a normal person who doesn't have that option, why would you want to look elsewhere? Just bet on India. Look at what's happened to earnings growth. Look at what's happening to political stability as well as fiscal deficit. Which country is talking about a glide path in the way India has? We have fiscal discipline, which is unheard of elsewhere.
And this government is very, very conservative when it comes to fiscal discipline, right? Which is again a win-win. But while we talk about all this and buy India for 5 years, what do you buy? You've had so many sectors. The Modi stocks have ran up significantly in the last 3 to 4 months. Defense, railway, infrastructure, anything that's got a slight bit of policy in it has already run up.
On Saturday I had Deepan on the show.
Except PSU banks.
And he's one person who's always very, very conscious about the valuations. And he's been looking at astonishment with the market running up. So I asked him, now, are you going to look at valuations Monday onwards? He's like, for now.
This is a new world.
For now, even I can't, just look at the valuations. Because
but we should, I think, try and understand that, right? Does draw parallel between a better economy and what that means for India Inc. See, we've seen earnings. They were not a standout. They were in lines, maybe slightly better at best, but it wasn't as...
But Samina, think of it this way. 4 years of double-digit earnings growth.
You can't beat that, can you?
That's stellar. That's stellar. And by the way, an answer, we can't have answers. We'll ask Taimur Beg and everybody else. But brokerages have. So Tamanna spoke about Bernstein. There is a note from Jefferies. There's a note from Motilal Oswal. Right? So some of them out there. So Jefferies, for example, is saying that there is a cyclical upturn underway in private capex. They like capex plays, real estate, industrials, power. Power is a consensus. Yesterday, both Manish Dangi and Rajesh Bhatia spoke about power. And they say private financials like HDFC Bank, Bajaj Finance, IndusInd Bank and Kotak Bank are trading at significant discounts to long-term averages, and therefore that's the one pocket. And that is the Jefferies view. And if we can get the Motilal Oswal view, which we used on the trade setup, because they have defined stocks. So Motilal Oswal is giving the areas of focus and the stocks that will gain as a result of those. Now, which valuation you buy them is your call, but Motilal Oswal is saying that you can go out and buy a KEI, a Polycab, an Interglobe Aviation, Adani Ports, all of those.
I think Citi had a similar view. They said that, and in fact, this is one thing we should try and understand from an analyst. Given that there is an expectation of a stronger mandate, of course, reforms like labor, land, will take center stage, and there might be an easier roadmap to that.
So not just to prick that bubble, because everyone's talking and all of those notes are talking about labor land reform. Remember, and this is something that the Prime Minister said in successive interviews, if they need to, they had an overwhelming majority in this last term.
They could have pushed
with all the helpfuls. About 400 was already happening. The thing with land and labor reforms are they're very state specific. You need the state governments who could be from different parties to also come and do those reforms. And especially land is extremely tricky. So this government has also shown that political acumen, like with the farmer laws, that if it's at the end of the day going to hit your core voter base, then you're not going to take your electorate for granted. Is what I'm saying.
And I think one more area that the markets were a little concerned about was equalization of capital gains treatment of debt and equity. Now, will they use up their political popularity to push that is something we should understand from.
Yes.
Should look unlikely because the street's not going to be very happy. It won't come because their coffers are full now, right? They don't actually need the money at this stage.
It doesn't matter. The street,
but there is fraud
doesn't
in the broader
convert
markets.
To votes.
Yeah.
So politically, only politically,
it might not be such a.
You can get
tweak
away,
it a little bit,
you can
and especially because there's been time and again from March so much noise being made about froth in the broader markets. So just tweaking that a little bit may, of course, ease that froth. But we'll have to understand. Look, we're sitting here and deciding and thinking what could be the next big reform or the next big talking point. But the next 100 days become critical. Even before that is the budget. So we've got so much excitement lined up. A quick check on how implied Nifty is looking like. It was 800 points a few minutes ago. And that is looking similar. 802 is what we're eyeing. A 23,500 start is what we should be getting in. Banks will be the big focus point. Adani Group stocks actually did exceptionally well on Friday. Some analysts like your global players like Cantor Fitzgerald, for example, has always touted the Adani Group stocks being as a proxy to play India.
Yeah.
And we saw what happened on Friday. 10 of Adani Group stocks were up 8 to 10% each.
If you are going to have an 800-point gap up, then I think it'll be tough to pick what won't run. But to understand what...
I can tell you what won't run. IT.
Possibly. I think even they might just tag along today. But just to give a perspective on what a possible third term, which seems very likely right now, actually means in terms of policy direction. We're joined now by Editor-in-Chief NDTV Network, Sanjay Pugalia. Sanjay ji, very good morning. It's a very exciting morning here in the studio. And for the markets, आप देख रहे हैं 800 point gap up Nifty पर. इसके बाद क्या होगा, प्रॉफिट बुकिंग होगी या नहीं, अगले 2 दिन देखेंगे. लेकिन ये समझने के लिए कि अगर इतनी भारी बहुमत के साथ, इतने नंबर के साथ तीसरा टर्म आ रहा है, व्हाट डज इट मीन फॉर गवर्नमेंट्स पॉलिसी फोकस?
एग्रेसिव और डिसाइसिव पॉलिसी मेकिंग चलेगी. बहुत सीरियस कंटिन्यूटी रहने वाली है. और जो बहुत सारे ऐसे काम हाई ग्रोथ क्रिएट करें जो रुके हुए थे या जिसमें थोड़ा कंसेंसस का या पॉलिटिकल कॉशन का इशू था, वो मुझे लगता है काफी हद तक दूर हो जाएगा. क्योंकि तीसरा टर्म एम्फेटिक मैंडेट सारे रिकॉर्ड तोड़ते हुए ये मौका किसी भी इंडियन प्राइम मिनिस्टर को रेयरली मिलता है. 50 साल के बाद कभी मिलता है. वो मौका इनके पास आया है नरेंद्र मोदी की जो सरकार बनेगी, और उनके पास ये स्पेस है. अब पॉलिटिकल मैंडेट है जिसमें वो हाई रिफॉर्म के लिए, हाई ग्रोथ के लिए जो जरूरी रिफॉर्म है उसको पुश कर सके. लेकिन याद रखिएगा, रिफॉर्म के हमारे डेफिनेशन अलग हैं और एक पॉलिटिकल लीडरशिप के डेफिनेशन अलग होते हैं.
उसी सवाल को आगे लेते हुए हमारी अभी बात हो रही थी कि लैंड जो रूल्स हैं, लेबर रिफॉर्म्स हैं, इज दैट मार्केट एक्सपेक्टेशन? पॉलिटिकल डेफिनेशन में ये बैठते हैं या नहीं?
मार्केट को कितनी तवज्जो दी जाए ये भी नए वाला मैंडेट तय करेगा और मार्केट को नए रूल सीखने पड़ेंगे. बाय द वे, जहां तक लैंड और लेबर का सवाल है, उसमें यह है कि ये सारे स्टेट के सब्जेक्ट हैं. अगर तमन्ना आपको याद हो तो हमारे एनडीटीवी के इंटरव्यू में प्राइम मिनिस्टर मोदी से जब मैंने सवाल पूछा कि रिफॉर्म को आगे कैसे बढ़ाएंगे, तो उनका यही जवाब था कि सेंटर, स्टेट और लोकल सेल्फ गवर्नमेंट तीनों जब तक मिल के जुगलबंदी में काम नहीं करेंगे तब तक बड़ी चीजें नहीं हो पाएंगी. स्टेट के बीच में कंपटीशन होना जरूरी है. थोड़ी अवेयरनेस बढ़ी है और वहां अगर काम तेजी से हो जाए तो ये चीजें ठीक हो सकती हैं. जाहिर है कि लैंड में और लेबर में, दोनों में ये चीजें मैटर करेंगी कि स्टेट वाले भी किस तरीके से रोल प्ले करते हैं. मेरा ये मानना है कि ये सब कोई भी चीजें हर्डल नहीं रहने वाली हैं हाई ग्रोथ ट्रेजेक्टरी के लिए. जो करना जरूरी है उसके लिए.
Well, and if you doubted policy continuity, if you had seen Mr. Sanjay Pugalia's tweet when the PM Modi interview happened, that since policy continuity seems imminent, let's focus on what happens ahead. Let's focus on what could happen ahead with Taimur Beg. He joins in this conversation as well, MD and Chief Economist at DBS Group Research, and heads the markets there as well. Taimur, great having you. Thanks for taking the time out. Assuming that the results pan out the way the exit polls are suggesting, Taimur, what's your sense about what does this hold for India as an economy in terms of policy and continuity, and what could it mean for markets?
Good morning, and I will begin by not assuming that, because I think it's a big leap to say the exit polls are going to be 100% correct.
Okay.
They have been spectacularly wrong in the past as well, so I will be very careful about taking any strong cue from the exit poll. But having said that, I think we can all safely predict that the incumbent will return to power. But the margin of victory, in my view, the exit polls, we should be very, very careful about taking that at face value. Now, in terms of policy continuity, I think that is what everybody says when there's a re-election. I think that what we need to think about is, if the mandate is stronger than expected, does the government try to do some things that were hard to do in the past? For example, leaning into the states with respect to land reform more than they had in the past? Or do they take this mandate as a mandate to basically do business as usual, which is a court for investment in manufacturing, but at the domestic side, sort of keep on adding momentum to various revenue generating schemes, which hopefully will include disinvestment, something that has lagged in recent years.
Sanjay sir, the next 100 days are becoming very, very crucial, and this is what we've talked about over the last few weeks as well. But before that is the much anticipated budget. What do you think the street should be expecting in the next 100 days in terms of reforms and the budget more importantly?
I will be careful in using word reform in a very broader sense, because Modi governance, they define reform in a different manner the way we define. As far as you mentioned about 100 days, my guess is, and I think that is an important point to keep in mind, during these 100 days, are we expecting announcements or action plan? I think there will be bias towards actual execution, commissioning, actioning things, rather than a document which only expresses the wish list or desire of what government wants to do. Maybe the work will start before the budget. As far as budget is concerned, never expect budget to be the main political event in Modi regime. A budget is one important exercise that this government does. Beyond budget, before the budget, I am expecting a lot of announcement. And more than an announcement, there will be a very time-bound kind of action plan. And my expectation is that all those things that are required to accelerate growth will be taken care of, be it manufacturing, be it triggering more capex, be it spending on infrastructure, keeping fiscal deficit discipline in mind. All of these things will be taken care of by this government, because they have that space available and that mandate available to them.
Taimur, just wanted to get, and I take your point completely that it's not final till the results come out. I also get your point that exit polls have got it wrong in the past. One would counter-argue in 2014 and 2019, these polls underestimated what the margin of victory would be, and their methodology has improved. The question, though, is how much of a push eventually can come from continuity? What can be seen policy-wise in term 3 which moves the needle? Because now the vision which has been placed by Prime Minister Modi ahead of the polls is now India Viksit Bharat, going to a developed nation by 2047. Can that really push things in a very constructive way?
Right. And I think that in terms of having a North Star, a 25-year-old goal to get somewhere, we've seen this in the past. Malaysia, for example, used to have a Vision 2020 plan where the view was that Malaysia would reach developed country status in per capita income by 2020. And that somehow became a guiding post for the government for about a 20-year horizon in terms of promoting industrial policy, in terms of pushing for innovation. I think examples like this tell us both the power of setting a long-term North Star. It also tells us some of the pitfalls that we have seen with countries like Malaysia, where things don't always work out the same way. So what are the things that India would do going forward? And clearly, the geopolitical tailwind for India is sort of unparalleled in history for the nation. The kind of sweet spot it is in right now, where whether it is American or European or Japanese investors finding India very attractive from a geopolitical perspective, as well from a fundamentals perspective, to base a lot of their investment in. So that is key strategy, and I think that is already in place. I don't think we need to see anything new in terms of reform to do that. It is a question of public-private partnership and the private sector being guided by the public sector in courting foreign direct investment. I would like to think that a administration that is now emboldened by consecutive victories would also take vigorous focus on climate change. We are talking in a week, or rather a couple of months, where we've had repeated record temperatures. The whole country, or a large part of the country, is baking in record heat. The imperative to set, again, a North Star, a 15, 20, 30-year goal to bring the country's environmental situation under sustainability, which also, again, creates huge opportunities for tech innovation, job creation, and investment, I think would be a very nice additional element to the existing plans.
Taimur, one follow-up before I actually have a question for Mr. Pugalia as well, but one follow-up, Taimur. If you look at across the large electoral countries that have gone to elections or will go to elections this year, right? Again, like you said, whether or not the numbers are the same as the exit poll, but because the incumbent party is set to return, India is one country that is showing policy and political stability. How much of a factor does that play in India maintaining the high PE multiples that India has? Should people be worried about these multiples, or should people say that this is warranted because of all that's happening in the country?
Right. I think the multiples reflect expectations of re-election of the incumbent. It reflects continuation of the 6% plus growth, heading further, hopefully, based on both domestic and global tailwind. I think that countries that have steady governance, Indonesia come to mind. We just saw a very successful election there, with the first round leading to President Prabowo's election and a peaceful handover of power, a similar policy trajectory. And I think investors like that. We will probably see that also in Mexico soon when they have the elections. So there are large countries out there which also are delivering stable governance, re-election, not necessarily leading to policy discontinuity. India is in the same vein. I think the big difference between India and the rest among the large democracies would be that extra growth momentum that we have, which would likely continue going forward. That, to me, is the core of the high multiples that the markets are assigning. And mind you, India has always been a high multiple economy, with few exceptions here and there over the last 20, 30 years, because underlying growth has been strong, particularly domestic demand, consumer cyclicals, some of the most expensive stocks in the country. That, I think, has rewarded investors despite the very high PEs.
Sorry, I just have a follow-up to this question with Sanjay Pugalia. Sanjay ji, in your interaction with PM Modi as well, you had made it a point to try and figure on what could the next 100, 200, 300-day plan be. To your mind, based on that conversation and your study of what BJP has done in the last 2 terms, where are the policy continuity chances the highest? Because while the markets may think of 1.0, 2.0 and 3.0 as 5-year blocks, the BJP doesn't necessarily think of sectors and policy pushes in 5-year blocks. They may think of it in a much larger block.
True. So I think the acceleration in infrastructure, in poverty alleviation, more focused welfareism, and bringing costs down for doing business, all of these areas are going to be very important area. And as Mr. Beg mentioned, climate change is the real challenge. Any government cannot ignore this, and the kind of public pressure and public desire will be built around. I think India has done pretty well, and they are going to get more aggressive from here on. So I'm expecting very, very large scale actions very, very quickly, actually. They won't result in days and months and maybe a couple of years. But for next 5 years, the work agenda is going to be very, very heavy in terms of all the sectors that are most important, including power or transmission or consumer spaces. I see a lot of push coming from the policymakers.
Taimur, you watch the world from outside. Are you constructive on Indian equity and Indian debt? And we're trying to pick your brains to understand where India sits when an FI looks at us. There are opportunities outside India. There are opportunities in other asset classes, be it Bitcoin, commodities, China, Nvidia. The list is extensive. If you are constructive India, that's great. If you're not constructive India, what is it going to take for you to turn constructive and overweight on Indian equity and Indian debt at this stage?
Right. I'm really always prefer, looking at India as investment in the context of a global portfolio manager's perspective. And you're absolutely right. We are right now at an everything rally. Gold to Bitcoin to China stocks, China credit to Indian equities to US equities. Everything has been rallying over the last 4 months. And the nervousness of global investors with respect to geopolitics notwithstanding, we seem to have a few very bright secular tailwinds for the global economy. One is related to new waves of technology, which would cause a new sort of paradigm with respect to investment, job creation, opportunities. And the second is, again, opportunities around green transition, where trillions and trillions of dollars would be invested with very strong return likely for those who enjoy the clean air and the reduced pollution coming from those activities. So clear link between investment and returns in the way we live, the way our productive lives operate are there. And I think that's what energizing global investment sentiment, despite the fact that whether it is in India or the US, interest rates on the high side, public sector debt is rising, and fiscal deficits are still somewhat under the gun in terms of concern. But I think from a portfolio management perspective, whether one wants to invest in relatively high yield emerging market bonds like India, underpinned by a strong rupee, or want to take advantage of the Indian equity markets, which despite having high multiples, seem to have demonstrated gainful returns for investors, I think that case remains undiminished.
Well, Sanjay, I'll come to you next. Just a very simple, straightforward question. What are the 3 challenges for the NDA government in the third term, if there are any?
High expectation from this government, because this government comes most likely with a stronger mandate than it had, and the need of speed. And the third thing I would say that the high growth which results into more jobs and equality. These are 3-4 key issues, and of course climate and the efficient governance. These are the 3 or 4 areas where I think are the priority or the challenges or the compelling need to work on.
Sanjay ji, one takeaway from the exit polls, if it also finalizes or, converts to the final results, seems to be that what was being offered on the other side was rejected. And I'm talking about the khatakhat promises, 8,500 rupees in every bank account, and very tangible promises, right, for voters. Now, in a traditional sense, one would think Indian voters would really go for this. Freebies है या नहीं, एक बड़ी चर्चा भी हुई. लेकिन अगर इस तरह का रिजल्ट नतीजा निकलता है तो क्या इसका मतलब है कि इंडियन वोटर को अब इन फ्रीबीज में इंटरेस्ट नहीं है, या जो प्रॉमिस कर रहे थे उन पर भरोसा नहीं है?
तमन्ना लेजीनेस है अपोजिशन पॉलिटिशियंस की कि वो एक स्टोरी लाइन नहीं ढूंढ पा रहे, वो लैंग्वेज नहीं ढूंढ पा रहे जिससे कि नया इंडियन जो बहुत ही एस्पिरेशनल है उससे बात कर सकें. उसके विजडम को डाउट करना कि आप बहुत ज्यादा पैसा देने के लिए बोल देंगे, कंपटीशन लगा देंगे, ऑक्शन लगा देंगे और उसको वो मान लेगा, ऐसा नहीं है. जहां तक डिलीवरी और प्रोमिसेस का सवाल है, अगर डिसअपॉइंटमेंट है भी तो भी वो करंट रिजीम के साथ अपने को ज्यादा कंफर्टेबल पाता है, इसीलिए पॉसिबली ऐसा मैंडेट या ऐसा पॉलिटिकल चॉइस उसने किया होगा.
So, इस वक्त the biggest, I think, focus of the market right now, and I'm just going to pull up the implied open again, which is hovering around an 800-point gap up, is what this day is going to look like. So before we continue the conversation further, I'm just going to play out this, I think, viral soundbite of the Prime Minister in that conversation with Sanjay Pugalia, where he talked about कि प्रोग्रामर थक जाएंगे 4 जून को. ऐसा लग रहा है कि शायद आज ही थक जाए, लेकिन वो बाइट सुन लेते हैं एक बारी.
4 जून जैसा आपने कहा, जिस दिन चुनाव का नतीजा आएगा, आप उस हफ्ते भर में देखना कि यानी भारत का स्टॉक मार्केट के लिए उसके सारे जो उनके प्रोग्रामिंग के जो प्रोग्रामिंग वाले सारे उनके थक जाएंगे.
Like I said, maybe if, that kind of frenzy will already be seen today. There are already reports about brokers perhaps asking for higher margins. Exchanges telling brokers, please be ready for large volumes. Sanjay ji, my question is that this way of the market being a gauge of what is happening in the elections, what do you think about that? Because उस पर बहुत चर्चा हुई पिछले हफ्ते भी, और फिर मार्केट्स में कितना फिर स्टीम होगा, ये खबर तो अब आ गई है, आज डिस्काउंट हो जाएगा, क्या 4 जून मार्केट्स के लिए थोड़ा बोरिंग होने वाला है आपके मुताबिक?
नहीं, मुझे नहीं लगता कि बोरिंग होने वाला है। आइदर वे एक्साइटिंग होगा। ट्रेडर्स की दुनिया को मैं थोड़ा कम समझता हूं, तो उस पर कोई कमेंट नहीं करूंगा, लेकिन मुझे लगता है कि बाजार ने काफी कुछ प्राइस इन पहले ही कर लिया था। बीच में जो थोड़ी नर्वसनेस हुई, वो डिपेंड करता है कि किसका कलेजा कितना मजबूत है या कमजोर है। मुझे लगता है कि आज कहीं शॉर्ट कवरिंग के लिए भी भागने की जगह मिलेगी कि नहीं मिलेगी। जो कमजोर दिल के एफआईआईस थे, उनका मुझे नहीं पता। जैसा कि आपने देखा होगा, प्राइम मिनिस्टर ने बहुत केयरफुली वर्ड किया खुद को। उन्होंने कहा एक हफ्ते में, एक दिन की बात वो नहीं कर रहे हैं, तो इसलिए मुझे नहीं लगता है कि आज या कल का फोकस ही इंपॉर्टेंट है। ऑफ कोर्स इंपॉर्टेंट है, ये एक सिंबॉलिक तरीके से इंपॉर्टेंट दिन है, लेकिन अगले कुछ दिन आपको ये बताएंगे कि शेयर बाजार का डायरेक्शन क्या रहने वाला है, और वो डायरेक्शन एक ही रहने वाला है, अपवर्ड।
Let's shift a little bit of focus to GDP. And Taimur, it would be unfair if I didn't have a conversation with you around GDP data and what that means for real economy, for India Inc. But firstly, what we've picked up is private consumption continues to remain subdued. Rural economy is also soft, but the headline number has beaten the most optimistic street expectations in terms of Q4 GDP reading. Do you feel like the strong trajectory of growth will continue, especially hoping that the exit polls reflect exactly what happens tomorrow?
Well, I think, like many of our peers, we continue to struggle with India's GDP data. There seems to be, either the way the methodology has changed or either the way various statistical quirks work, that we increasingly find it difficult to reconcile high-frequency data with the top-line GDP numbers. So I'll keep the 8% number aside for the time being. I think the general characterization of the economy, I think, was very nicely summarized by you, that we do have some traction on the investment side. Public sector remains a big supporter of investment and expenditure that is supporting consumption, but overall top-line consumption could be better. When we look at listed companies' earnings numbers or sales figures, they don't seem to suggest an economy that is growing by breakneck speed. It's growing, but much more modest than some of the top-line number from national accounts would suggest. So I think that disconnect notwithstanding, it is unquestionable that the market is in a good stage, supported by strong sentiments, and the investment picture, both concurrent as well as prospective, are rather bright.
Taimur, S&P outlook upgrade coming in on India just a few days ago. A week before that, the RBI bonanza to the central government. A strong GDP reading like we've seen it. Policy continuity. I don't know what's not working for Indian debt. Do you feel like the 10-year could be headed all the way down to 6.5, which makes Indian fixed income a very attractive source, not just for foreigners, but even local retail investors in India can invest into Indian paper? Or should invest, rather?
Right. I think that from a portfolio choice perspective, clearly the equities look, the better risk reward than the fixed income side. But if I am a fixed income house and I am sort of mandated to invest in fixed income and I'm looking in the global fixed income space, certainly the rupee government yield look attractive from a risk reward perspective. I do have concerns about the debt trajectory, which can be resolved through higher GDP growth. And that's the way it was, say, about 15 years ago in India, when the government did have large fiscal deficit, but debt GDP was not an issue because the underlying nominal GDP expansion was rapid. So if we're heading into that sort of trajectory, somewhat accommodating fiscal stance and somewhat higher fiscal expenditure outlays should be absorbable by the economy's buoyancy.
Taimur, in terms of FII direction, was curious to know your view, because that's the big thing that everyone's going to watch today. There were short positions and substantial short positions built. The whole narrative for the last 6 months has been that FIIs are waiting for June 4th before taking a call, and they've been underweight India so far, at least on the equity side of things. Do you see that changing? post June 4th?
Right. I think that FIIs are not only waiting for domestic cues, but also global cues. Of course, any sort of, interest rate cut by the Fed would be a very powerful signal for the next wave of, where money goes. It's very easy these days to just park your money in US dollar debt and US equities because both have been giving such strong returns, which puts emerging markets, even in the bright spots like India, at a disadvantage. I think India's saving grace is that domestic flows are so strong toward the equity market and increasingly so toward the debt market that the over-reliance on external flows has sort of come down substantially. And I think that's a really, really positive development. Think about 2022 when global EM space was completely unloved and there was virtually no investment. In fact, there was a huge amount of capital withdrawal from global equity space. Indian markets rallied because domestic investors were putting in a lot of money. So I think those days of us, sort of waiting for cues from global investors as a source of bullishness or bearishness on India, I think that's behind us.
That's the quote of the day, huh?
Yeah, in some sense, most certainly. And Taimur, very well put. So thank you so much for, it's great to hear somebody who looks at all the markets kind of bring that point out so well too. So that is very, very appreciative. I have one final question to Sanjay ji. Sanjay ji, from a government formation perspective, key posts, etc., is there something that you are watching out for? Assuming, of course, that tomorrow the incumbent government comes back to power, so on and so forth. Is there something out there that you are keenly watching out for?
Short answer, the way entire Indian politics has now been crafted. These were the conventional ways we would look at who will be the minister and all that. These things have kind of not remained anymore that relevant. And it is all about Mr. Modi's persona, how he navigates, how he crafts his team. He is very careful in choosing people who can execute well and deliver well. So he's going to be very focused on that. And because we are working in a democratic setup, the wide representation of people's aspiration is the core filter that Prime Minister Modi uses for his cabinet formation. But it is no more of a great curiosity that who will be the individual finding various ministries.
Individual doesn't matter, but are we going to possibly see a weekend swearing in, Sanjay ji? 8th and 9th की बात चल रही है.
Can't really pinpoint a date, but it has to be around that time because Prime Minister has to prepare and leave for G7 in Italy. On 13th it begins. So it has to be before 12th, maybe between 8th and 10th. Yeah.
Okay. Thank you so much, Sanjay Pugalia there, Taimur Beg, setting the stage for what is going to be a very, very exciting morning. And guys, be prepared for a weekend swearing in. We may have that as well. So the news flow is just going to continue. Very short break, but we're coming back. And on the other side of the break, we're going to talk about what you should do in today's trade.
Welcome. This is India Market Open. We're taking stock of the futures and options space, and a lot of things that I may refer to on the screen behind me may be completely irrelevant should we see the Nifty open with a gap up of a minimum 500 to 600 points. Speaking of the implied open rate, we're actually looking at an 800-point up move right at the start. Now, if this thing does come through, and if this up move does come through in the starting 15 minutes of trade, a lot of, players and traders who were short in the markets are going to be forced out of their positions because they're going to be, there'll be, in many cases, there will be an auto square off of sorts, because there will certainly be a certain margin calls for all those who are short as far as markets are concerned at the moment. On the other hand, of course, we will see a sharp up move. Now, the question really is the first 15 to 20 minutes will be crucial in terms of determining levels as to where we can, in fact, see the Nifty move and tread within. But the 23 mark will, of course, be crucial, because should we see this gap up come through, the 23,000 will become a near-term support of sorts, and that is what we're going to keep an eye on. Now, this is as far as your implied open is concerned, and a lot will change. We want to very quickly talk about the India Volatility Index, which has moved up about the mark of 23, 24, 25 and thereabout. And, we've been looking at that one. Remember that the VIX will not see a huge vol crush just yet. The volatility crush will come through tomorrow. That's when we actually have the outcome of the general elections. That is when perhaps you can expect the volatility to abate a little more. And by volatility, I mean it's nothing but the substantial expansion in option premiums, which is expected to contract because that event and the outcome of the event is out of the way. At the moment, we're seeing India VIX at around 25 and thereabout. Remember that even if the Nifty moves higher, this also means a significant expansion in call options, and that will in fact lead the India Volatility Index to move even higher. So don't get lost in the fact that the VIX can only come off and that there's something wrong with it, because it isn't. It all determines, it all is determined by the option premiums, and that's the reflection of the India Volatility Index. Now, this is the call that I'm talking about, because there's going to be, just look at the amount of writing here. Of course, some may say that, well, these are calls which have been bought, sure, but against these bought, someone has in fact gone ahead and sold these calls as well, which is why the covering of this call is going to further exacerbate the Nifty to move higher and perhaps accelerate that up move as well. It's going to be, there certainly is going to be a lot of volatility in the first half an hour of trade. Let's move on and talk about other factors then and see how things could potentially pan out. Of course, these are stocks. Friday was a mixed day of trade, and there was still a little bit of uncertainty. Even though the Nifty ended up higher, there was a little bit of covering coming through towards the last 1 hour of trade. But I reckon that a lot of these levels will change considerably over the course of the next 1 to 2 sessions as well. This is, of course, a list of all the stocks which saw increase in OI, among other stocks which saw, and then again, very early days, we're seeing unwinding, but I reckon that there'll be a lot more short covering as we move into trade today. So a handful of factors that we need to keep in mind when it comes to the Nifty is 1, 23,000. 2, the first 15 minutes to 1 hour of trade, which could potentially be very, very volatile. And after that, of course, we will start seeing the volatility index stabilize, even as we get a little bit more clarity with respect to option premiums. All in all, we are certainly set for a day of trade where, well, the bulls are going to be in control.
You're seeing a complete rock and roll beginning for the markets today. Thank you for that, Agam, and that setup. Soni Patnaik is now joining us, AVP, JM Financial Services. It's an exciting morning, Soni. And I'm very curious to know, what is the advice that you're giving to clients this morning? What are you looking at? I mean, I think the big question is, after that phenomenal gap up that is expected, are you very quickly going to see profit booking or a further upsurge?
Hi, good morning, Tamanna. Thank you so much for having me on the show. I think rightly already explained by Agam, 23,000 mark is going to be crucial. Now, if we were to open above that, there can be significant short covering seen in market. over the days, maybe 2 to 3 days, we can see 23,400, 23,500 levels getting tested, as that is where the next level of resistance lies as per the option metrics. So slowly, maybe 23,000 becomes the near-term support. This is, of course, assuming that the gap up happens above 23,000 and it quite comfortably happening. Maybe not a lot of profit booking can be seen immediately right today, because, the momentum, the sentiment can continue for just another 2 days. And the VIX is also expected to cool off after the event. So the entire momentum can continue towards that sentiment. Important would be to point out here is that the stock specific and sector specific momentum will continue irrespective of any sort of profit booking that may or may not come. But we're expecting that sector and stock specific momentum to continue on a positive side. So I think selected sectors, maybe the defense, the PSUs, the power space, these are the sectors one can keep the focus on and stay stock specific approach, book your profits, trail stop losses when it comes to indices.
If you are looking at a fresh trade, now of course a lot of this take your profits, hold on is all only valid if you were constructive on the market on Friday or not so constructive. This morning at 9:15, if we see that gap up of 23,500, would it make sense to maybe buy some calls of 24,000 with a 27 June expiry? Is that even a trade that is valid, you think? Because you're not going to be able to make too much money today itself if you're going to create fresh positions.
Right. Good morning, Samina. So what can be done, just considering that the positive momentum may continue. However, considering that the India VIX may also crash, the option premiums may not give you that actual movement. So best strategy to apply over here could be a bull call spread where you can actually hedge a position. So instead of just going for a 24,000 naked call option, you may go for a 23,500 call option. You can buy of the 7th June and hedge it with a 24,000 call option, sell against it. So that will bring down your overall cost, and it will also protect in case the volatility index falls down, you would have your entire strategy protected to some extent. So I think a strategy with some writing of options will hedge, the entire position as of now.
On the Nifty is the recommendation coming in from Sony. Naked calls and puts may not be advisable at this stage, but with the 27 June expiry, you could do a little bit of a bull call spread. What about Bank Nifty? Sony, how constructive are you on this? It seems like 50,000 now becomes almost a given in this series at least. If we do get a 2-3% uptick on Bank Nifty in opening, would you go long on Bank Nifty or any other strategy on Bank Nifty, if not just a naked long?
I think definitely Bank Nifty has that momentum left. It's sort of corrected significantly towards 48,000 odd levels, and it's just showing that the momentum is there to continue. Underperforming the other indices, Bank Nifty, any move towards 50,000 will mark the first level that it can test. There'll be a short covering in Bank Nifty only if it's able to cross 50,000. The next level of resistance as per the option metrics in Bank Nifty stands about 51,000 level. So I think that's the level one can look out for, as a lot of PSU stocks may contribute to the rally that Bank Nifty may see towards 51,000 level. So here also a bull call spread of 50,000, 51,000 call option can be applied as a strategy.
All right, Sony, time for a very quick break. We're coming back with your top calls. Usually we do 2. I think today we should do at least 4, just because this market is so exciting. But we're back with all of that and pre-open after the break.
a minute 30 left for the pre-open session to come in. Welcome back to NDTV Profit India Market Open. It's a thrilling day of trade in front of us because we will see the market start off on a very strong footing. The question only is, can we build on from there? Now, you all must be thinking what to do in a scenario like this. Well, aside of course, what the pre-open rates will throw up, and we'll of course get to that. Here's what the key brokerages are saying with regards to what the election outcome, the possible election outcome based on the exit polls means for portfolio construct. So Jefferies says they believe a cyclical upturn is underway in private capex, and they like some of these capex beneficiaries from a longer term perspective. I'll tell you what they like as well, because they mentioned that in that note. They say real estate, industrials and power. These are the things that they really like, and power is a consensus name. Yesterday we were speaking to Manish Dangi as well as Rajesh Bhatia of ITI, and both of them said power is that one big bet that they are taking even after the gains. Of course, Jefferies goes on to say that private financials like HDFC Bank, Bajaj Finance, IndusInd Bank and Kotak Bank are trading at significant discounts, and they also like some of the other infra plays and some of the laggards like ONGC. So that's the Jefferies view on the election outcome. Let's move on to some of the other brokerages and see what Bernstein is saying. For example, they say exit polls have gotten it wrong and right. The 2024 results are different. They hold with less deviation, and they believe that the relief. Let's stick with this plate. They say that the relief rally continuation is likely. Markets could touch 23,500 briefly. Mr. Bernstein, that will happen today. They say that higher seat tally could increase magnitude, but not the duration of the rally. That's interesting. So that's the other interesting thing to watch out for. And of course, they say the positives are manufacturing, the laggards are IT and consumption. So this is the Bernstein view. I think there is CLSA, there is JP Morgan, there is Citi, and there is BofA as well. And there is Motilal Oswal too, which is saying some of the stocks to focus on. Do we move on to the Motilal Oswal name? Yes, let's get to the Motilal Oswal plate, because there are actionable stocks. Motilal Oswal has done one thing. They laid down the categories which could be in focus. That is cables and wires, EMS, railways, infrastructure, and the stocks within those categories. So Polycab, KEI, Keynes, Sarma SGS, Sign, DLM, T-Tiger, Jupiter Wagons, and Adani Port and SEZ. So suffice to say, these are some of the stocks that you should certainly keep an eye out for. And we will tell you all about what key brokers are saying during the course of the day as well. But guys, lots of stocks in focus.
Rates are out. I mean, I've been waiting for you to track that, because you've opened 23,370. This is the pre-open rates. Adani end 10% upper socket. Adani ports 10% upper sockets as of the pre-open session. This is the pre-open session. ONGC, okay, let's tell you just what's flying on the top. And this is the first few seconds, so all of the standard disclosures that we'll see rates settle in a bit. NTPC about 6% up. ONGC, so out of the Nifty 50, all 50 are in advance. There are no declines. You're probably going to see that across the board. Both the Nifty and the Sensex over 3% up. The Nifty nearly 4% up right now. And let's pull up the rest of the Adani pack as well while we're at it. We talked about ports and end, but let's see what Power is doing. Let's see what Total is doing. All Adani green. So all of them have opened. Total is about 20% up. So they've hit upper socket and close to it in the first 2 minutes of trade. Standard disclosures over here that you're watching NDTV, part of AMG Network, which is part of the Adani Group. Soni Patnaik, Sunny Agarwal with us. We're going to do a little more spotting of what we're seeing. I don't know. I mean, if there's anything in the red today and not participating, that's going to be a big question. CG Power, 15% up. Oil India, 15% up. NHPC, RVN and SJVN. The theme is very, very clear. Mazgaon, BHEL. So your PSUs, Bharat Dynamics, Samina, 8% up. So your PSUs, defense, economy facing, railways, a lot of them perhaps in the 54 Modi stocks of CLSA. I'm not so sure. All right, Soni, first let me come to you. We promised to get your top picks. Do you want to revise them after you've seen the pre-open race? Because the question right now for people watching this is कि अच्छा ये बहुत अच्छा चल रहा है, हम क्या करें?
Of course, Tamanna, my topics were from the defense and power space. The first was BEL, Bharat Electronics. My target was 340, 350. And if the pre-opening rates, which is capturing around 325 odd levels, if it holds, then of course, just take a momentary break, and this target is still intact. 340, 350 holds very much on cards for BEL. One can just revise the stop loss to 290 if the 325, 320 levels are getting achieved. So just revise the stop loss to 290 instead, and hold the targets for 340, 350. So that's still intact. The second pick would be in Tata Power. Tata Power also, it's looking quite strong. The target is 460, and as of now, we can see that it is also looking quite good on the pre-open chart. So from current levels, if we can see 460 getting achieved, trail your stop losses to 440. That's a very strong support for now. If the 460 gets achieved, you can see further continuation towards 485 to 490 levels in Tata Power. So I think these two stocks still remain quite strong on top of the charts. And apart from this, I would like to add one fresh call from the PSU pack, SBI. I think that's also looking very strong on charts. 800 continues to be a very strong support. So as long as 800 is getting defended, the stock can head towards 900. So I think 890 to 900 can be the targets for SBI. So that's a fresh addition I'm making from the current morning pack.
Sunny, what do you think? Is there even an opportunity to make money in this market if you want to initiate a trade and blanket Nifty, Bank Nifty, stocks, long, short, anything that a trader can make money on between today and tomorrow? What's the strategy?
Yeah, good morning. I think a lot of tailwind behind multiple sectors. So what I feel is that oil and gas is the one sector where we can see some big reforms from the current government. And based on that, I feel Engineers India is which is an indirect proxy play on oil and gas capex. So Engineers India is the one stock which we like. In addition to that, what we feel is that capital market as a story will continue to do well, as we are seeing a new high on the market today. So we will see a frantic addition of demat account over the period of June, July, August, and to that extent, broking companies like Angel Broking and IIFL Securities. So capital market story, or for that matter, wealth managers like Nuvama and 361. So entire capital market story looks good. And in addition to that, what I feel is that BFSI is an ultimate beneficiary in the long run. So companies like Aditya Birla Capital, where we are seeing a very good growth as far as NBFC business is concerned. And again, there you get to play the asset management company also. So AB Capital is the one stock which we like. And at the same time, one sector which we feel is bottoming out is basically real estate ancillary. So companies like in tiles, plywood, and laminate segment. So within that, what we feel is that Stylam Industry is a company which has reported a fantastic set of numbers. And at the same time, Somani Ceramic, which is one of the key leader in tile segment. So both these players which we like. And again, on defense side, I think Ajad Engineering, recently listed company, again, a very solid set of number, a very niche business, 33%, 35% EBITDA margin business, doing very well. The capacity is likely to go up by 10x next year. So I think Ajad Engineering is one of my picks as far as defense sector is concerned.
Just a quick mention on the dollar-rupee pair, which is also opened with a pretty solid gap up. This is in reaction to the exit polls and also the fact that the GDP reading came in much higher than expected. 0.5% higher. You've got an opening at 82.99. So about 50 paisa move on the dollar-rupee pair is what we have. This is a good start on the local currency, even in a morning when the dollar is not looking weak. So the story is about rupee strength as opposed to dollar weakness. A quick check on the 10-year, because there is expectation and talks that over the next couple of months we could be headed all the way to 6.5 on the 10-year. An opening around 7 is what we should be expecting, and that should be giving some sort of legway and leeway for new trades to be initiated there. So the dollar-rupee pair becomes important, so does the currency. All eyes after, of course, June 4th will move to the RBI policy meet on 7th of June. Sony, Adani stocks are all up blanket 10% this morning. Would it require bravery to initiate fresh longs even at these levels? 3,700 on Adani Enterprise, case in point.
So I think, Samina, we discussed on Friday, and obviously it looks quite strong. 10%, 9 to 10% of an opening. You may see if there is any sort of intraday dip that you can get about 2% odd. Initiate the longs on those dip and just avoid riding the momentum as of now. I think that dip is going to be very important. Very strong support around 3,600. So just buy the dip and wait. Positional target, one can see it getting extended towards 3,800, 3,850 from current levels also. So I think it's just important to buy the dip and hold with that 3,600 support, which is very strong, and keep a target of 38, 3,850.
We're waiting for a dip, but let's wait and watch if the dip comes about or no. As the pre-open rates have settled.
What is the dip? Is it 1% from here, 2% from here, 3% from here?
Well, anybody's call. But right now, the point being that the dip doesn't seem to be coming. No, I
tough to call, right?
In a lot of these stocks, we may not actually see dips coming in the first place. At least a dip which will enable you to buy, because you may get a dip after a particular stock rises another 5% and then dips 3%. So very difficult to say that.
I think the strategy right now is bet on strength, right, as opposed to weakness. So just because the stock is weak, don't go out and buy it. Is
that's a great
simple point to make.
That's a great thing
because
to do.
Look at what's weak today. Very few. Sun TV, Godfrey Phillips. Actually, you have to see the ones which are not working today, and those might be specific news-based stories. But what is really working is PSU stocks. That entire index has closed in the pre-open session about 6.5–7% up. NHPC, SJVN, BEL. Now, once again to that question, if Sony says buy on dips, where are the dips?
And frankly, the dips aren't necessarily coming in the first 1 hour for sure. We still have to wait and see how the short covering happens, and if indeed the index were to lead higher from where it is at the end of the pre-open session. By the way, we should pull up the index. It's 800 points higher, right? 807 points higher. From here, if short covering over the course of the next 48 hours leads the index higher, then you very likely will not see too many dips in stock-specific names as well. At the end of the pre-open session, by the way, Adani Ports is not necessarily a high beta stock, right? It's probably one of the more low beta names within that group. That one is up about 7.5% as well. So in a lot of these stocks, the dips might not be coming. Sunny Agarwal, are you waiting for a dip? Because you're not trading. You're buying from a 1 year, 2 year perspective, maybe Sunny. What is it that you would go out and buy on open today?
Good morning, Niraj. I think obviously dip is warranted if somebody want to construct a medium to long-term portfolio. As you all know, valuations are not very much comfortable as far as many companies are concerned. But having said that, what I feel is that there are few theme or sectors or companies that are likely to do well basis quarterly earnings. So Garware High-Tech Film is one company. Again, a leader in basically paint protection film and sun control film, reported a very solid set of number during the last week. So this is one company which we like. What we believe is that structural steel tube industry is the sector to be in. Entire pipe and this structural steel tube industry will have a very good time over the next 2 years because of the robust capex in water as well as oil and gas sector. So companies like Jindal Saw, or for that matter, Indian Hume Pipe, APL, Apollo Tube. So these are the few companies on mid to small cap side. At the same time, on large cap side, what I feel is that NBFCs are the first sector which will benefit in case the monsoon is normal and there is any expectation of rate cut. So companies like Cholamandalam Finance, which is a proxy play on auto, basically rural auto sector. At the same time, Aditya Birla Capital, which is again a play on SME lending book. So these are the few names which we like from a medium to long term perspective.
Sunny, in terms of banks, would you bet on private banks or PSUs right now? And what would be your top 3 private bank bets?
Yeah, so we would like to bet on both the names, whether it is private or PSU. So within private, we like Axis, ICICI, and one smaller name, which is an basically Karur Vysya Bank. So these are the 3 private banks which we like. Among the PSU, I would like to bet my money on Canara Bank, Bank of Baroda, and Indian Bank.
Those are a few banks that are being listed out. Sony, across the banking universe, anything that we could look at acquiring this morning? If everything is up 4–5% in pre-open, anything there?
I shared for SBI from the PSU space, but apart from the PSU space, if something from the private space still attracts my eyes, that would be ICICI Bank. I think, anywhere around 1160, 1150, in case that dip is seen, it's a very strong buy from those levels, and it's a good support. It's holding multiple support around 1120. Keep a stop loss of 1120. The stock can test 1210 first. Above that, you can see it making fresh highs towards 1240. So I think this is the stock one can look for in the private space now from derivative point of view.
So having a party, 1170 on ICICI Bank, 4.5% higher is what we have in pre-open trade. Remember, these are a few bets that market participants are betting big on. So ICICI Bank, HDFC, some of the private sector banks may be doing quite well in today's trade. Nifty 50 is expected to open around 23,350. That's an 810 uptick, pretty much in line with what implied Nifty was indicating too. Now, whether we get a gap up and then settle down during midday trade and then pick up again in the second half is something we should wait and watch out for. Well, and that if does happen, then it may give traders an opportunity to enter the markets midday trading when the market sees some settling out in the next half an hour to 1 hour as well. The breadth of the market will be very, very solid. Auto stocks also might be in focus. I know we've not talked about this, but we had a stream of auto sale numbers that showed up on the weekend, and a reflection of that will be seen on earnings. Tata Motors back up to 960. Now, that hasn't happened in a very long time. M&M is up 3%. So even across the board, auto stocks are seeing big moves. But Niraj, the frontline Nifty is going to be the star today, followed by, I think, supporting cast will be the Adani Group stocks.
Yeah, well, you hit the nail on the head, but this is exciting times. We'll start off at record highs once again. More importantly, this will probably be the largest single-day rally in a really long time as well. But 3.5%, 750 points for the Nifty. This is exciting stuff. 23,275 for the index on open. We haven't seen the shorts covered as yet, by the way, so watch out for that. I know Agam said VIX won't decline sharply. We'll keep an eye out for that as well. Let's get up the... Okay, India VIX, let's leave that out, but let's get the bank Nifty and see if banks are participating. 3% higher for banks as well. So actually banks are leading the way, if you will. Maybe some of the stocks like IT, etc. might be a bit softer, but we are doing well for ourselves, so which is actually a really good thing. It will keep on moderating between 23 to 23,400. We'll keep on seeing the index oscillating. Let's get the mid caps and small caps, 3% apiece for that as well. So pretty strong start. Let's wait and watch how the rest of the day shapes up. But bring up the heat map up on the screen and show you what the large caps are up to it. Except for iShares, which is a very wobbly auto sales numbers, everything in the green. The point is, the Adani Group is leading the way. Adani Ports is up 9%. Power Grid up 6%. Adani Enterprises up 6%. Shriram Finance is up about 5.5%. Then the PSUs come into the play. Power Grid, NTPC, BPCL, SBI, ONGC. I dare say the Nifty PSE should be doing extremely well in the session today. Almost everything in the green. I don't see an HDFC Bank in the top 20, but Reliance is certainly up 3%, so that is also doing reasonably okay. HDFC Bank is just up about 1.7%. Guys, keep an eye out for HDFC Bank for sure. As the day progresses, this could be really good, and promptly, as we said, the market has seen the biggest gap up opening in 4 years. This is, by the way, in points terms, not in percentage terms, but the biggest gap up opening that the market has seen in so many years. Strong, exhilarating start to the day. All Nifty 50 in the green. You couldn't have asked for a better morning.
Yeah, and I think the big question over the next few minutes is going to be whether there is a spate of profit booking, if the news is priced in or there is more steam left. One reckons that there is going to be a bigger bet because remember, like we've been speaking, the short covering will now kick in and come into play as well. I want to talk about what's happening in the broader markets as well. All eyes on the Nifty, the stellar star, but is this surge being seen across the board? And the answer is largely yes. The Nifty mid-cap about 2.5-3% up on opening. The small cap also over 2.5%. I just want to pull up Bank Nifty for a second and see what's happening there. Some of these indices are actually astonishing, at least in what we saw on the pre-open rate. About 50,000, very, very convincingly for the Bank Nifty, 3.5% up. I want to pull up the Nifty PSE, the PSU index as well, because that's where the story is today. The Nifty PSE, CPSE, where you're completely seeing a big push for policy continuity. And if you're wondering where that reflects, that reflects here, about 5% up this morning. So we were wondering what we'd pick for our top stocks. Let me start with the Adani pack, because that's really where the story and the headline is across the board. Some of those covered by Niraj in Nifty, but across the board, you are seeing a superb start for the Adani group, and you're seeing Adani enter about 6.5–7% up, Adani Ports 9% up. Remember, the group has also seen its largest ever revenues, and those details came out over the weekend, about 9.5–10% up on Adani Green. Standard disclosures in place. The group has now crossed its pre-Hindenburg levels as well. So whether it's Total, Wilmer, Energy, all of them seeing a massive bump up at opening. Now, rail stocks is the other section that we want to focus on this morning. RVNL, Titagarh, IRC, even IRCTC, which had pretty poor results. But if you pull up the others as well, all of them doing very well. So all of the areas that have seen focus, whether it's rail, defense, let's pull up defense next, all of them seeing that thumbs up, that salami of sorts to the exit polls is how I'd put it. IRFC, BEL, Bharat Dynamics, all of them doing fairly well this morning. BDL, Mazagon, Cochin, some of the others that we should see how they're doing, and very, very good opening over there. Just to add one more segment to this, and we were talking about PSUs. The PSUs are the story. SJVN, NHPC, NBCC. Now, how anyone buys at these points or at this level, I'm not quite sure. But these are some of the top movers this morning, and that overall theme is very, very clear. Samina, I think it'll be hard to spot anything that's not working this morning.
20 stocks of the Nifty 500. Those are the only ones that are seeing a little bit of a cut. That goes to show you the kind of breadth that the markets are currently witnessing. Across the sectoral picture, the biggest gainer, in fact, the broader markets are performing in line with the benchmark index. Mid-cap index is up 3%. Mid-cap 100 is also seeing a gain of about 3%. Small-cap index is up 3% as well. The India VIX has declined substantially, and that's worth a mention. 18% lower on the India VIX this morning. So all the way down from 26 or 25 actually on the VIX on Friday. It's down about 18% to trade at 20. So that's a huge drop in premiums as well that we've seen. Well, across a few sectors that are catching our attention, banks are up 3.5%. You've got FMCG that's lagging slightly behind. So FMCG and IT are only up 1.5%. Metals are up 3%. PSU Bank is the trade of the morning. It's up nearly 5%. Private banks lagging slightly behind with 3.5% gains there. Real estate is up 4%. Pharma is seeing a little bit of a soft morning, and I'm saying soft because it's only relative to the kind of gains that the market is seeing, up about 1.5%. Now, oil and gas also sees a 4% gain. So that's what the street looks like. It's a very, very solid morning in trade. Infrastructure names are the top gainers in today's session. So Adani Power is your top player or top gain on the Nifty 500, up 12%, followed by IRB Infra, that's up 9%. Jupiter Wagons, we've talked about how railway has been quite the Modi stock or the Modi theme over the last couple of months, up about 3%. Adani Ports, Adani Green, Adani Total. So the top 6 gainers, of the top 6 gainers, 5 of them come in from the broader market Adani names. PFC, Bank of Baroda, Titagarh, HAL, HDFC Asset Management is up 7%. IRFC, IRCTC is trading higher. Capital market names like Angel One are up 5.5–6% each. Real estate companies like Prestige Estate is also trading with a gain of 5.5–6%. Bharat Electronics, Suzlon Energy, BHEL, IOC, OMCs, BPCL, HPCL, all are seeing a sharp up move in today's trade. So real estate also looks pretty solid in trade. So do banks, so do capital market players. Motilal Oswal is up 5%. The list is just extensive. I can keep talking.
This is our conversation this morning. What stocks?
Yeah, most certainly. But one group that stands out just before we get to our guests, the Adani Group stocks.
Is actually trading flat. That's definitely worth a mention.
Okay.
It's lower.
Okay. Yeah, but the Adani Group is now at pre-Hindenburg levels. If that is any indication of what the rally has been like, fair and square, Friday and Monday, today, I think that group has done really well. Look at those stocks flying around. Let's get in Ravi Dharamshi, founder and CIO of ValueQuest Investment Advisors, on the phone line. Ravi, really appreciate you taking this time out and joining us this morning. But exciting start to the day. How do you think about what's next? Short term, medium term, long term?
Hi, Niraj. Good morning. Good morning to our viewers. No, thanks for having me. I think, the biggest takeaway for investors is that, India has, since independence, always succumbed to fits and starts in terms of reforms, in terms of moving ahead and progressing. So this time around, a particular government has gotten 3 terms and is probably going to get a 3rd term in a row. So that, I think, paves the way for doing some real long-term tough reforms and really thinking from a 50-year point of view, 100-year point of view, and not in terms of next 5 years of winning the next election. I think that is the biggest positive takeaway for me. And honestly, as an investor, Indian investor has been very, very, aligned with the market. But I think the missing piece has been the foreign investors, and hopefully they will join in the party too.
Ravi, so we've opened gap up, but independent of the levels, would you be a fully laden investor, or let's say if you had cash, would you be deploying that starting immediately, or are you waiting for or biding your time for some dips, if you will?
Luckily for me, we have been kind of deploying in the market even prior to this. So, but yeah, now it gets a little tougher because you'll have to start chasing even more. But if the funds do come, I am definitely not averse to deploying. Yes, you'll have to work hard and find spots where the relative value is there, or where the entire next 2-3 years of future is not yet baked into the numbers. So you'll have to work harder in finding those opportunities, but I would deploy.
Ravi, I like that line. Luckily for me. I'm wondering who the unlucky ones are today.
More importantly, fortune favors the prepared mind, right?
Yeah.
He's modest, but he's been brave enough to deploy when a lot of people were sitting on cash.
Yeah, so honestly, I mean, I think I won't say I took a call or I'm brave or anything. I think rather than apply my brains and fringe portfolio making on a particular event, we have to think long term. And from that perspective, I think we were very clear that Indian macros have never been so good. Micros are also following up. Why wait for an event?
Yeah, so that was the big bet on India, irrelevant of what happens in these elections. And I think the big trigger over here for the kind of gap up that you're seeing is that any uncertainty which was being seen in the last week has been wiped out. Look at the India VIX, 18% down. India VIX is at 20.13. Niraj Shah joining in, CEO Institutional Equities at MK Global Financial Services. Nirav, great to have you on this very, very exciting morning. I mean, the screen's looking spectacular. I think one for the records, really. And, you're seeing that big push there. The question is, how do you move ahead from here? The internal debate has been that, okay, you will see some profit booking. At what point do you see it? And what do you do at this level?
Thanks for having me on the show. The question that you asked me is something that, that was true for last week, a year back, 2014, maybe even 2004, right? So even when you had a complete change in the government and the markets kept down 20%, that was the time to go and buy, and you had one of the biggest bull markets. So to me, the only alternative is that if you are not in the Indian equity asset class, what are the alternatives? And I believe that you don't have a great alternative anywhere in the world. I've been saying this for some time. You've got the right stacks set up for India to end up being a bubble market in the next 3 or 4 years.
No, so Nirav, just to that, I take your point. Thoda evergreen type question tha mera. Give me a chance to revise it. Yes, that question has been always there in the Indian markets. What you do at 2004, also that question was there last week. Also the question was there specifically. Let me come to specific spaces. If I were to look at the PSU stocks, defense stocks, and the valuations they have run up at, an investor who is looking at their portfolio this morning and feeling very happy also has that question, ki aaj main kya karon? After this kind of run up, can you sustain above 23,000? We know now, as in the market has completely priced in what we are likely to see on June 4th as well.
Right. So I'm not even looking at what's going to happen tomorrow. Maybe the numbers are in line with what the exit polls are predicting. Maybe they could be higher or lower. Frankly, anything once you got a full majority, I think I'm agnostic in terms of how the current political dispensation is going to look at policy reforms going forward. To me, the key point is that you started on a 6% growth rate, you have hit an 8% growth rate. Your core inflation today is lower than what is there in the US. I don't think that we are getting a sense of where we are heading as a country, right? Uh, we had a big problem with current account deficit. You are at a stage where in next 1 or 2 years, you will sort of get into a current account neutrality situation, right? So you need to look at equity market in context of where my macroeconomic variables are moving, right? So I suspect that you are not going to get reasonably good returns in the equity market, but even in the bond markets, because your interest rates are going to head down over a period of time. And that finally determines the valuation. Now, coming back to, obviously there are pockets of expensive valuations like defense and maybe some other stocks. So what do you do? If you think that the story is great, if you think the valuations are great, then you try and play with the size of the bet, right? So I can be neutralish or I can be underweight, but you still need to be a part of that. You need to be invested in these stocks because which is where there is longevity of the growth. Let me give you an example. Let's try and put this in context of why this is happening, right? From 2010 to almost about 2020, you had markets rewarding a particular set of investments, which was largely consumer-driven, high ROC, consumer stocks, stuff like that. And when the market incentivizes that, you got investments that will follow that. So you got Jindal's setting up a paint plant, you got Birla's setting up a paint plant. Who set up infrastructure in the country, right? Everywhere in the world, we are short power today. Someone has to set up utilities. And therefore, what we are seeing right now in terms of utilities is that the market has to have an adequate incentive structure for promoters to go and say that I am going to invest in these new sets. That is what is happening. So this is capitalism. I am not at all surprised.
Ravi, hi. It's also Samina joining in. Big global brokerages from the Jefferies to the Cantor Fitzgerald have recently touted Adani Group stocks as a proxy to play the India growth story. And the sharp rally on some of the stocks is a reflection of that. Do you feel that there is still significant investor wealth to be created amongst these stocks, especially in the backdrop that fundamentals of these companies have also improved significantly?
No, so clearly if the exit polls are right and if this government is coming back, I think a lot of the performing sectors will perform even more. And that includes infrastructure, defense, railway, all those kind of stocks are going to continue to perform. Having said that, the margin of safety over there has definitely reduced dramatically, but I don't see a reason for those stocks to come down in any near-term thing. And I think the growth will get stronger. I do expect some kind of a change in the way the market is performing at some point of time, because I think the central government is probably going to slow down on its own capex, and private sector and state governments are expected to pick up the gauntlet over there. So the type of companies that do well might change. It will not be based on what the central government is doing, but more on the private capex cycle.
Sir, I'd like your thoughts on this one too, because you can't help but see the kind of rallies some of these counters have seen. Fundamentals have
Samina, I think there's a small audio thing, maybe your mic has fallen, but Nirav, the same question to you really, and you were just starting to answer that. Could you give your thoughts?
Yeah, so my view is that, the execution that we have seen at Adani Group has been mind-boggling. I mean, I'm surprised, and I don't think that, given the fact that there are always valuation concerns around some of the stocks, I don't think investors have looked at it very deeply. And please don't get me wrong, I'm not even advocating. We've not covered, we don't have the stocks under coverage. But if you look at what they have done, for example, in the renewables, right? They've got close to about 2 lakh acres of the most appropriate land bank for solar. They are backward integrated in not only in cells and modules, but they have also started, it's already commercially operating. We are talking about Ignore. They want to get into polysilicon. I don't know how many guys are aware that they already set up a 1 lakh ton of copper refinery, right? And just look at the scale and scope of the work that is happening in the airports. Their execution is at a different level altogether, right? So there is a lot of optionalities in that group. And I think that only one group which really invested in India's infrastructure in the last 5 years has been Adani Group. And the world opens up because that is where the entire thrust is going to be. Where is the capacity to do large scale construction? I'm just giving an example. We've seen the PM going on record saying that you want to pitch very, very strongly for Olympics in 2034. Now that is going to be massive investments, right? As a country, do we have the capacity? Right? So there are some groups who have invested in setting up their capacities and at a world-class level. So I'm keeping the valuations aside. I'm just talking about the fact that some groups took a different route in terms of where you want to invest for the next 20-25 years. A lot of the groups went after the consumer-facing businesses. What is going to play out over the next 10 years is going to be entirely different.
Okay. Ravi, understand we have to let you go, but one final question really. Where is it that you now put incremental money at work? Is it, would you bet at some point of time consumption will make a comeback? Would you bet on policy push continuation and therefore some of the beneficiaries which have gained quite a bit but are expensive might still become better? How do you now allocate incremental capital, Ravi?
My incremental money obviously will try and look for areas that have not performed, and especially I think large private banks or consumption-related areas. These are the ones. Having said that, in the next few months, can the momentum continue in the stocks that are doing well? Absolutely, they can. But if my prism is 3 to 5 years, and from that 3 to 5 years prism, I find investing in some of the performing companies a little bit of risky. Am I still holding on to those companies? Yes, I am, but I am not putting any more incremental money on them.
Okay, Ravi, understand we have to let you go. We'll let you go on that note. Thank you so much for taking the time out and being with us today. Really appreciate your time.
I have one question with Nirav. Nirav, I was listening to what you were saying about how private sector now comes to the forefront, and really the trick over the next few sessions, and I would say not just next few sessions, next few weeks in this market is going to be to identify the new pocket of growth. If you're looking at a situation where you have policy continuity, the same kind of push to the private sector, etc., where is that growth? Where do you see the clues there? So, for example, we were having a conversation this morning that climate change and tackling climate change will become a huge theme for any government, including Indian government, in the next 5 years. You're going to push down on Make in India, PLI, and the participation of the private sector. Do you think it's very important now to identify those new pockets, and what have you been seeing? Nirav, can you hear me?
Yeah, I can hear you right now. I missed the last part of the question.
Yeah, so the last part of the question was essentially that what are those themes in your view? Where are those stocks? What are those themes? Because right now someone has to spot the new ideas. The PSEs, defense, rail are already there, priced in. If private sector is going to take the forefront, then where are those new ideas coming from? Nirav?
Right, the markets, right? But I've seen a major reform.
Can you start that? Yeah, you kind of froze there for a second. Can you start that again, please?
Not.
All right, we have a bit of a glitchy line over there, but I'm really interested in seeing that story, because that's how you will need to spot the winner, right? Because the themes that have been going on for the last, I would say, year and a half are there very much. They will continue. Public sector companies will become stronger, their balance sheets healthier, your infra, policy push, road, railways, defense, etc. But what's next? What's new? If they have said time and again that AI, EVs, climate change, all of these areas are going to become big themes, becoming Atmanirbhar in semiconductors, APIs, what are the stocks that you then now look at as the next run?
I mean, even if you don't go that far, consumption, rural consumption. That could be one space that may start seeing some traction. Of course, those numbers haven't looked very promising in terms of GDP data. But if you see the government doing a little bit of a push to spruce up consumption, then I think rural could be one more theme that the markets may start constructively looking at. But all in all, what's interesting, and I think this is what we talked about, guys, the Nifty saw a start at 23,340. We're 200 points off the day's high point. So profit taking has kicked in as expected. Trade will stabilize through about from now till about 11:30, 12, and you may see a return of euphoria in the second half of the session. But there is a little bit of sanity that's now returning. The euphoria is settling down. PSU banks are the star trades. So is real estate. So is defense. Everything is moving up. But I think the markets may now give traders an opportunity to come back in and buy for the second half of trade and maybe potentially even tomorrow. So watch out for stocks. There are lots of stocks that are off the day's high points. If you're a short-term trader,
on what you call sanity. We're still 600 points up. So
we are, and stocks like Adani Enterprise are at the record high. So if you didn't enter these counters at the get-go, but beyond Adani Group stocks are a whole host of other names. And Nifty itself was at 23,340. That was an intraday high. We're slightly lower now, so we've been up about 150, 180 points from there. Actually, do we have any of our technical guests with us?
No, but we have Nirav Shah, so I think we should ask him.
What do you think? I know this market should and is best divided between a tactical trader and an investor. We know what investors should be doing, right? Staggered investments, be disciplined. That's when you create significant wealth. I don't know whether you're comfortable answering this for me, but we did get a gap up, a massive gap up in the first few minutes. We made that high of 23,340. We're 200 points off that now. Do you feel that now could once again be an opportunity for bulls to maybe initiate fresh longs, maybe covered option strategies between now and today? Or do you feel like it's buy the euphoria, buy the exit poll and sell the news, and the markets may go back to business tomorrow?
So, it's usually difficult to take short-term calls, but I am of the view that the markets are gradually going to rise pre-budget, anticipating what the government is going to do. They'll probably stall over there. I'm then probably looking at a longish spell of time correction more than anything else, till the time that market is ready to try and price in a rate cut. And then, when you start looking at you get more clarity about FY26 earnings and FY27 earnings. So budget, I think, will be crucial in terms of the government trying to lay the direction for the next 5 years and 10 years. And I suspect that you are likely to have the next level of reforms on the indirect taxes, right? And without trying to get away from the fiscal consolidation that are going to move forward. And that could be a big, big trigger in terms of how the markets are going to look at.
Nirav, I think we had a patchy line, and I don't know if you could hear my question. Let me come back to it. I was talking to you about what new themes that we can spot of what is expected in term 3. I mean, what is already run up, what is already clear in terms of policy push is there. So your rail, defense, improving balance sheets of PSUs, etc. That theme is there. What are the new areas that you are looking at right now?
So I think if you just read what Mr. PM Modi has written in one of the editorials today, size, scale, scope, and standards, right? So what you want to do it at a big, much, much bigger scale. I think that we've lagged in terms of electrification. And India spends about $100 billion in oil imports. You need to get that supply chain right. So I think that'll be a massive, massive focus in terms of how do you want to set up that ecosystem for electrification in the country. You mentioned about climate change. I call it energy transition. Serious work has to happen in the green hydrogen, and then all the way into solar and wind turbine manufacturing, right up to the mining stage. And like I just referred to, I think the critical thing is that you also want to uplift the entire manufacturing in the country. And one way to...
Nirav, on a portfolio recommendation level at this stage, where we've seen whether
that is to try and reduce the median GH neutral rate. I don't know whether I'm being audible or whether we are...
we can hear you, Nirav.
Sure.
Nirav, go on. Please go on.
Yeah, so I was just saying that to me, a critical reform could be whether you can reduce the revenue neutral rate for GST, which is let's say about 16% to about 12%. That is disinflationary. That does exactly the same thing that happened to a direct tax. You got lower.
Glitchy line with Nirav. We need to fix that so that we can hear all his answers correctly. We'll try and get that in place. Now, while we do that, just wanted to go through this very interesting piece my colleague Mahima sent me actually. She's put together top 5 stock picks if you see results tomorrow like what the exit polls are indicating, and that's what the market is celebrating right now, still about 600 points up, 582 points up on the Nifty. So now a slew of brokerages have come out with their top picks. So number 1 of those picks is Adani Ports, which has been supported by, so this is a call by Citi and Motilal Oswal because it's projected to benefit significantly from infrastructure and logistics development. Number 2 is Coal India, that's on Motilal Oswal, Phillip Capital and Jefferies list, and they all put out their reports on pre-election. Coal India is anticipated to perform well with continued focus on energy and industrial growth. Number 3 is ICICI Bank. Now, I found that interesting. Motilal Oswal, Phillip Capital have put this out on their list. ICICI Bank is viewed as a strong player in the financial sector, expected to benefit from political stability and sustained economic growth. So the private banking space and all, but ICICI Bank is one of the favorites. SBI is the other one. Motilal Oswal and Phillip Capital have both put it on their list. They say SBI is looking like it will reinforce its dominant position in the banking sector. And then there's Larsen & Toubro, endorsed by Motilal Oswal and Citi. L&T stands out in the industrial and infra sectors as it is expected to thrive with ongoing and new projects. So there are many actually, and in fact CLS had a list of 54. Yeah. But the top 5 that we picked, which have brokerages going for it, and all of them actually doing very well today.
PSUs are trading very, very firm. Tamanna, even OMCs this morning, look at HPCL, it's up 8%. BPCL, IOC also doing extremely well. 96% of the Nifty 500 stocks are trading deeply in positive territory, with a whole barrage of broader market names that are actually doing quite well. 97 of the 100 mid-cap stock gainers are coming in from the PSU pack. So that is the kind of breadth, the euphoria that the markets are seeing. Of course, what we saw on Friday was only the Adani Group names do well, but beyond that, the rest of the market, in fact, those Modi stocks, like they've been called, an HAL, a BDL, a BEL, did take a little bit of a break, maybe potentially giving investors and traders an opportunity to jump back into these stocks. Bharat Dynamics, which has been the star of the last couple of months, is probably lagging slightly behind the gain of only about 3%. But is that an opportunity to buy? And that's what we should try and understand from our trading and fundamental analysts. BL is up 6.5%, 7%. You've got, let's actually pull a Vodafone idea. I want to pick this one up because it's been, while it may not be an election theme, the stock has been seeing enormous amount of buying interest over the last couple of weeks on back of its Theo brokerage upgrades. Another 4% being added, getting closer to 16 rupees on Vodafone.
Actually, Vodafone is kind of an election theme in the sense
that is the government's policy.
In the sense you have, the government is now a serious stakeholder in Vodafone. They have a big bill due in FY26, and it's up to the government to make it easier, maybe convert some to equity. The direction so far in term 2 has been to allow Vodafone to exist and survive. So in that sense, yes, I would say. Nirav is back with us. Nirav, I'm going to do a quick audio check with you. Can you hear me clearly?
Yeah, I can hear you, and then I don't know when I end up losing you, but yeah.
I know we have a bit of a patchy line. Nirav, just before we let you go, we need to have your take on what are the sectors and themes to look out for. What would be your topics and your advice to people today who may have hedged? No one knew exactly what the exit polls are going to say. They've beaten expectations, frankly. What is your advice to those who chose to hedge today?
I think, I always believe that you should look at equity from a 3-4 year perspective. For whatever it is worth, I don't think India has ever had a negative rolling 3-year Nifty return, ever, right? And this is through successive governments and through multiple challenges, through pandemic and GFC crisis. So that's the inherent strength of the Indian economy. You do nothing, India grows at 5%. if you have a great leader, you can grow at about 8 or 9%, right? So I am very, very bullish on the Indian macroeconomic situation. A lot of this is also being in the right place at the right time, right? In terms of the geopolitics, in terms of how it is turned out. You don't have to necessarily figure out what you're going to make in the next 1 month, 6 months, whether you want to buy today, tomorrow. No one has a right answer, right? Should equity be a significant portion of your asset class in terms of investment? The answer is unequivocally yes. It is difficult to try and create alpha. So for normal investors, mutual fund is the way forward. Outside that, to your second question in terms of what are the sectors, infrastructure and, I believe that this is a big tail. So, you got EPC companies, you got pumps, you got engineering services. I'm bullish on real estate. I'm bullish on banks. And you got new sectors coming in, right? So now you've got people investing in data centers and stuff like that. So, but like I said, I'm not making a case for any one particular company. We do need to keep in mind that the investments, the investment profile is changing, right? It is no longer only copper and aluminum and cement. A lot of the investment is happening in digital infrastructure, which is very, very intensive. I talked about energy transition. I talked about electrification, stuff like that. So, some 300, 400 companies have got listed in the last 4 or 5 years. So, India has a big, big tail of, new companies, niche.
Nirav, I think we're again having a little bit of a patchy audio with Nirav Seth, but he was talking about how there are newer sectors now that markets can, of course, the participants in the markets can, of course, go out and trade and make money in. Remember, you have newer themes that are emerging, but most people believe that the old economy could really truly be a good play even today if you want to be an investor in equity markets. The Nifty is looking very sweetly placed. Of course, it looks like it is getting closer, or rather averaging out at 23,100, which is potentially where fresh buying may come in. Well off the day's high point on the index. And you can see the chart, right? You saw that big bump up in the first few minutes, and then we've sort of stabilized as we see it. A quick check on the Wix. The Wix was down. Oh, and Bank Nifty has hit 50,000. I think that is also, that's the India Wix, down about 21% now. But the morning star is the Wix along with, there you go, 50,230 is what we have on Bank Nifty. The biggest contributor there has to come in from PSU stocks. Adani stocks continue to be drawing attention of traders and investors alike. So you've got stocks, while the Nifty is off the day's high point, stocks like Adani Enterprise, Adani Port are actually trading at their day's high point. So that is a bit of a conundrum, play that you're seeing on the street. Holding on to those greens, it's pretty much a sea of green, but 96% of stocks on the Nifty and the mid-cap index are trading deeply in positive territory. I don't think there's any letting way, but I think there will be a little bit of an opportunity over the next few hours for fresh trades to come in.
Yeah, absolutely. It's going to be exciting. I think the big story this morning is also what's happening with the Adani Group, a roaring rally over there, and Agam is joining us now to tell us all of those details of what's working. I think Adani Ports is the big highlight, but overall you are seeing the Adani Group stocks doing well, and the MCAP has now gone to pre-Hindenburg levels, isn't it, Agam?
Absolutely. So the market capitalization across for the entire Adani Group has moved above that, and well, at least in terms of the key takeaways, it's taken about 16 odd months for the group to move above that. Well, at the moment, we are looking at about $10.8 billion worth of investments coming in from long-term investors. Moreover, on a group basis, at the group level, we've seen EBITDA surge 45% to a new high of well over 82,000 crores on a group level. Moreover, on a profitability mark as well, we've seen a whopping 70% rise there as well, coming in at around 40,000 odd crores. Now, the core infrastructure EBITDA has also moved above the $8 billion mark at an all-time high level of liquidity as well, where the group cash balances now stand at just a little less than 60,000 crores. And finally, coming down to its net debt. This is something that the company has, or rather the entire group has been talking about in terms of reduction, and they have come through, and this is probably the first time that the net debt to equity stands at below the mark of 2.5 times, and that's also one of the many reasons why we have seen that was sharp up move as far as the Adani Group companies are concerned.
Well, that is the Adani stocks, all and up and about in trade. Adani Port, the darling of D Street, like we said. Well, the Nifty might be the star. This is a supporting cast. It really needs PSU banks and Adani stocks helping the Nifty trade at record levels as we see it. We'll slip into a break. We'll come back. We'll be continuing our coverage on what next for the markets, what are the themes, where should one go fishing, whether or not the party can continue even beyond the next 2 days. We'll come back and talk to Andrew Holland, so stay tuned for more on the other side.
Thanks for tuning into Talking Point. It's a special talking point because the talking point today is the market, and as Samina keeps on saying through the morning, the support cast and what the support cast has done. To talk about all of that, two men who got both their political call right, if you will, or at least the seats call right, and maybe the markets call right as well. I'm using the term maybe because I don't quite know what the positioning was last week. Andrew Holland and Nandik Malik, CEO and CIO at Avendus Capital Public Markets, alternate strategies respectively. Gentlemen, thanks so much for joining in. Did this shape up exactly how you thought it is, and what's the way ahead now? Because that's the key thing. Either of you.
No, so it shaped up the way we were thinking the numbers would be. In our framework, 2019 was a tougher election than 2024. Again, the starting point alliances in UP, Karnataka, Bihar were more in favor towards NDA. So the numbers have panned out. Markets also are higher. What could interestingly happen is a lot of short covering can happen, because in sectors like banks at index level, there are lots of FII shorts. And if typically in the last 2 or 3 election cycles, exit polls haven't got it wrong. If anything, the exit polls have indicated a lower number for the victor. In 2009, they gave a lower number for UPA when they came back. In 2014-19, they gave a lower number for NDA when they came back. So I would say there's a decent chance that even 400 could be touched. So it may not be a meaningful probability, but not a zero probability as well. So if that happens, you could have substantial short covering. We already are seeing a 2.5% rally, 2.5% rally at index level. That could easily go towards Nifty 23,500 in a very short time.
I'm asking, is the short covering dependent on a particular number of seats? Even if it's at 350 and not 400, you don't think the short covering will come in?
No, it should happen. So even then the short covering should happen. But at 375, people will throw in the towel pretty quickly.
Which people?
No,
the shorts.
So I think the foreign investors, obviously came in and hedged some of their portfolio, which is fine.
Yeah.
For that tail risk, I mean, they would be, told by their risk managers you have to do that.
That's standard practice.
That's standard practice. Yes. So they weren't shorting the market. They were just going for that tail risk. Now, if that's gone away, they're going to come back and say, well, we don't need it anymore.
But my question is, would you wait till the 4th of June? That would be too late. We're probably going to see that by this afternoon.
See, it's very easy, right? The market was down 2% last week. So just 2% is just covering that kind of fall of last week. Then you add the short covering. So easily going to between 3 to 5% today is where the market's going to go. And then if Nandik's, in terms of what the brokers are saying, that you could see an upside to those numbers, then you've probably got another 2 to 3% on top of that.
Let's break this down between an investor and a trader. We've got 23,100 crore, as we said. As expected, we should see.
Okay, so let's break it down between an investor and a trader. Let's assume that there is an investor who is watching you right now, wants to understand what to do. Should he put in the money right now? Because the usual statistic is don't chase the gap up. But here the gap up is slightly different in that, as both of you are saying, that there is a possibility of a short covering, but also that over the next 3-4 years, with the earnings growth and policy continuity, the markets may be much higher than where we are right now any which ways.
Correct. So an interesting point which needs to be factored in is most investors tend to be pro-NDA in their leanings, So you will have investors thinking, okay, fine, maybe we have a gap up. But you also have the other part of the brain, possibly celebrating the victory. So my estimate is a good amount of flow should come today itself.
Nandik, I want to sort of give you a counter to that. I agree with you. I mean, there's no data to show how investors in the market feel politically leaning. They push for continuity.
Correct.
But these same investors who are, to quote you, pro-NDA, last week were very circumspect. And if in their personal capacity you would have asked them, kaun aa raha hai, they would have had maybe no question in their mind. But when it came to the uncertainty in the markets, they followed through. So,
but then you did not have the data with them, the exit poll data last week.
Exactly.
Now the exit poll data.
So you need the data.
Yes.
At the end of the day, market watches the data.
Yes, absolutely.
See, market doesn't like uncertainty, right? So it doesn't matter whether it's foreign investors, big investors, or retail investors. Now you can see a roadmap. Now you know there's a roadmap ahead. Now you can go back with that conviction that I want to buy these sectors or these companies because they will benefit for the next 3 to 4 years of the policies of the government. So that's the confidence you get back to come back into the market and say, I'm okay investing at these kind of valuations, even though there's a gap up, because over the next week or so, we're going to hear about I'm sure about the 100-day policy and what that's going to be about. And that's going to be the next trigger.
Yeah.
Nandik, Andrew, comment on this, right? Let's break this down between a trader and an investor. We are at 23,100. We will stabilize over the next couple of hours. Europe opens up. FIs come back in. We may close at today's opening. We go into tomorrow. What happens then if the exit poll is exactly a reflection of what tomorrow's outcome is? And what happens post that then? Sure, we see 23,500 on the screen. We all clap our hands. Life is great. It's back to business on Wednesday morning.
No, so 23,500 and so the way in which the markets are panning out, at least we are very short-term focused as of now. I don't think at this stage we as fund managers or asset houses
do have the ability to.
Correct. We should be looking at what's happening after 7 days. The event is a very big event. The move which will follow the event will be big. So at least we are focused for the next 36 hours. And at least my view is in the next 36 hours, 23,500 will get touched once.
Right.
So what happens after that, I'm not very sure, because it's 2.5% rally, 3% rally. 23,500 is hardly 1% away. So, once that gets touched, my view is you won't see too much of selling because positions which had to be lightened have already got lightened. And now a lot of fund managers will now anticipate flows into that, let's say, their long only funds. So there's no need to actually, lighten the portfolio.
Right. So in your portfolio, I mean, you run the Avendus Absolute Return
Correct.
Fund,
Correct.
and it's some sort of long short where there is a little bit of hedging that takes place.
Correct.
Funds like these do exponentially when the markets are volatile. This is seeming like a little bit of a one-way journey, in my opinion. Where are your hedges sitting? Are you still largely long? Is there a little bit of short covering, hedging on your portfolio? What is the long-short ratio that you're sitting on?
Correct. So
and how will that change come Wednesday?
Yes. So at this point of time, the long ratio is slightly higher.
How much is slightly higher?
We will not
We
want
will
to get into
that, okay.
that. Yes. But at this point of time, we are slightly higher. The reason is the mandate of the fund is to give superior post-tax debt returns. And let's say the exit polls would have said that the number is under 300 or under 275, then even debt markets would have given you pain.
Yeah.
So the way in which we manage the position is with this kind of an outcome, we are making good amount of money today. And even if, let's say, the numbers would have been bad, then we would have fallen less than debt markets.
I think also, Samina, you're concentrating on Nifty, right? And I would say look beyond Nifty. I mean, yes, you'll have those stocks, but the bank Nifty is again,
it's 50,000 as we see it right now.
It's got to
so
go.
So are you buying private banks?
It's got to go a lot higher. It just has to, with the RBI dividend, which we talked about. Like, I'm so excited about that, and I don't think everyone's gone short of the banks. That's been the favourite kind of, because it's liquid. Now they have to cover that and start to say, if the economy is going to do well, which we saw those figures on Friday, the banks will follow.
And is the bias with private sector banks?
I think it's with private and PSU banks.
And also capital market play, right? With the kind of euphoria equity markets are seeing, all fund houses are going to be increasing or at least earning more money in the next couple of quarters. And we've seen some of these stocks play out so well. And if, like Niraj keeps insisting, this is Buy India 5-year story. And if this is Buy India 5-year story, capital markets also become the best bet.
Yes, and we'll probably see that. I mean, they're sitting in quite a bit of cash as well, so they have to deploy that over the next few weeks as well. So I think capital markets stocks will do well because of the longer term. I'd probably be more towards the themes that will play out, in terms of where I think the policies will be, and those will continue to be renewables, will continue to be defence, railways, capex in terms of infrastructure, and of course tourism.
Okay, and just to highlight the point that both Andrew and Nandik are making, we'll revisit that, the YTD performance of the PSU Bank Index versus the Bank Nifty, and just shows what a rank underperformer Bank Nifty has been to PSU banks, and thereby the probability of a laggard. So this is the today's chart, but if you put the YTD performance of the PSU Bank Index, this year 37% for the PSU Bank Index, it was 29% just before the day started. Bank Nifty was 1.5% before the day started. It would have gone up a little bit, but 4.2% versus 37% just lays out the contours of where the underperformers have been. So, Andrew, you were talking about themes that will outperform because of policy. Policy beneficiaries have done well in the last 12 months to 18 months as is. Would you still bet on them, or would you look for the laggards?
I'm going to buy into where I think the growth is going to be.
Okay.
And the laggards are laggards for some reason, right? So FMCG, I'm more bullish on the kind of premiumization, so that's more beverages. But the action is going to be in capital goods. It's going to be in renewables. It's not going to be in, yes, rural economy might start to pick up, but it's not going to be that the top line is going to grow from, 10% to 35%, right? It's not going to happen. It's going to be a slow burn up for these companies. So I would be where you're going to see huge growth, and I think these are the sectors which you need to be focused in on.
So I was just looking through this piece that the Prime Minister has put out as an op-ed after he's exited Kanyakumari, and I thought it was interesting. And right now we're speaking with the assumptions that the results on June 4th reflect what the exit polls are saying. We're currently talking about what next in a possible Modi 3.0. And I just picked out this piece because he says we will need to make several changes to move forward in the global scenario. We also need to change our traditional thinking regarding reform. Bharat cannot limit reforms to just economic reforms. We must move forward in every aspect of life towards the direction of reforms and should also align with the aspirations of Viksit Bharat. He goes on to outline 4 directions: speed, scale, scope and standards, reiterates alongside manufacturing we must also focus on quality and adhere to the mantra of zero defect, zero effect. Now, the next few days, frankly, I think for the market, for policy watchers, is going to be to understand what a 3.0 looks like. More of the same, or new ideas we haven't really thought of. And I want to come to you on this, Nandik, because the big question immediately bogging the market in the last few sessions was minutiae in the larger picture, but is there going to be a change to capital gains tax, a new view on taxation? Now, when you're talking about reforms, not in the traditional sense of reforms, do you think there is going to be a case of adjusting expectations, even from the markets, and what we've traditionally seen as, all right, these are the reforms which are thumbs up and these are the actions which are thumbs down?
No, I agree with that. So whatever you read broadly covers everything, So if the Prime Minister does anything, that will fall in the definition which has been given. So yes, they will do reforms. That's given. Some amount of taxation change could happen. So, for example, we are very sure that arbitrage taxation, that will go away. So,
arbitrage taxation will go?
Yes.
Okay.
Yes. As in, there's an arbitrage and debt funds.
What do you mean when you say taxation and arbitrage will go away? It's taxed as equity currently.
Correct.
Yeah.
You're saying that'll be taken off?
Yes.
So that doesn't remain attractive anymore because arbitrage is currently giving, 8%?
Yes, and the taxation rate is much lower than debt funds. So what is happening is a lot of money is going from debt funds towards arbitrage funds.
Which makes sense. Liquid short-term debt over arbitrage is an easy trade.
Yes, but that means that bank deposits are suffering.
So there will be a push to shore up bank deposits
exactly.
again.
So bank deposit growth is something which they can't let that number be on the lower side. So what's happening now is the industry has grown from 50,000 crores to 2 lakh crores in the last 1 year. If they don't do anything on the taxation part, my guess is this will grow from 2 lakh crores to 5 lakh crores or 6 lakh crores in the next 1 year. So an incremental 3 lakh crores goes into those funds, which will hurt your bank deposits.
So just if you take a step back a year ago when they changed taxation on debt, that's when arbitrage became, they almost encouraged money coming into arbitrage and equity funds, right? So interesting that they will rationalize it this year.
Yes, because I don't think they would have anticipated that the industry would go from 50,000 crores to 2 lakh crores. And around the same time, even you are hearing stories about bank deposits getting affected.
Yeah.
So
I mean, financial, it's some level of equity euphoria as well. A lot of the fixed income is moving into equities to some extent,
but
right?
If the Prime Minister, the statements which he made, if we have to be a growing economy, only equities can't power you.
Yeah.
Your debt markets, your fundraising has to be equally robust. So they can't let deposits suffer like this. So I think that is the lowest hanging fruit which I can think of. And otherwise, see, they have been very good with the feedback. So even if, let's say, they do something and the feedback is not positive, historically they have gone back and addressed that.
Yeah.
So I don't think the worry of making a mistake will be at the top of the mind. They will do what they think is right, and then based on market feedback, participant feedback, they will course correct.
They're happy to course correct.
Yes.
Now, just the other point, talking about feedback. Now, we'll see what the results are tomorrow as well. But one big theme has been improving employment,
Yes.
rural distress, etc.
Yes.
Fair to assume that those are going to be big themes in the next 5 years, and then some of the sectors, Andrew, that you were also talking about beyond premiumization. If I'm talking about FMCG, consumption, everything that has been lagging also comes back into play?
Does it?
I'm not sure it does. The monsoons hopefully will be in line with what everyone's expecting, so the rural economy, there'll be a push. There might be some land reforms, there might be something towards electricity again, which will change the kind of landscape there for making things a lot easier. But these are the big things that you can do. In terms of taxation, you can look at capital gains tax, you can look at many different things. But I think at the end of the day, the market will like only two things. One, the continuity of policy. I mean, there might be some new policies that come through. But that's what the market's after, and we've all kind of forgetting that we get the JP Morgan bond index inclusion this month, which will bring down bond yields. And I keep reiterating banks because it's the only play in town.
Top three.
The bank Nifty, yeah.
So if India's inclusion in the JP Morgan index happens, we do get upgraded by the S&P in the foreseeable future. Raising debt for India Inc. becomes very attractive, and hence Indian equities also start looking good. But if I compare corporate debt to FDs, how does that look to you? Do you think that is something that may draw attention? Because the regulator has reduced the face value. There is genuinely a push to encourage a little bit of corporate debt amongst retail investors.
Yes. But the normal Indian psyche is, maybe it will take a...
bank safer.
Bank safer, yes. So as of now, people are more attuned towards that thought process. But taking a step back to the previous point which you raised, I think there is a misconception that the Prime Minister is more capitalist. I think if you look at his welfare schemes, it has been very pro-poor, very pro-rural. So I think that will be the primary focus going forward.
And rural is not growing. I mean, look at the GDP reading this time. Rural is still a star point for the country.
So I think...
the K-shaped kind of economy.
It's still, it still seems like... And you can't have GDP growth without consumption and employment. But, you, Andrew, are very excited about the debt markets. We hear all sorts of numbers, 6.5, 6.6, up until March 25. Better than expected GDP reading. You've got the RBI policy meet in a few days, inclusion of Indian JPM, post that, of course, at the Bloomberg Index. And as compared relative to other debt to our global peers, we are far better placed. What do you think the RBI could do on the 7th of June? Will they remain hawkish? Is this even going to be an event or largely a non-event?
It's probably going to be an event which we're going to quickly kind of move on from, because I don't think it's going to reduce interest rates.
They can't, till the Fed does.
Obviously, they can't be too negative on the economy because of the figures that are coming through. I think they'll talk about the bond markets. And I think they'll talk about what they might do with this money coming in. That might be something which will give us an idea about the rupee going forward. Maybe that's the focus of this policy rather than interest rates. But interestingly, some of the Federal Reserve people have said, if Europe and anywhere else want to go before us in terms of reducing interest rates, they should. So I think India still has that scope to go before the Federal Reserve if they want to.
ECB is going to do that.
But that has never historically happened, Niraj. It disturbed the rate differential, right? And that's not what you want eventually.
But you're getting flows into your bonds anyway, so that's going to come through. Yeah. So I'm not sure. You've got the leeway.
I think that's when we'll truly create history.
You got the leeway. But you're right. Perhaps you'll just wait for
and the Fed's not moving from the way it looks.
Well, let's wait and watch. I think the second quarter inflation numbers, if they are lower, could actually give an ammo. Because here's the deal, right? I mean, we've had a fiscal glide path laid out for us. If the government is not going to do as much spending, is the push necessary from the monetary side as well? That's the other question that comes into play.
So the only point on which me and Andrew have a difference of opinion is this. I think RBI is very comfortably placed, and they will follow the Fed because they would want that gap to, I think, slightly increase. The interest rate gap to slightly increase. RBI has done a fantastic job, and they can just kind of copy what the Fed does, and then, you don't have to be proactive because they have managed it fairly well till now. The other thing is people are focusing more on Fed. What people haven't factored in is you have US elections in
November.
In November.
So anything post that, yeah.
Yes, and I don't know what happens with this indefinite thing, but in case Trump is on ballot, then there's a fair degree of confidence that he comes back. If let's say other than the legal assets. And Trump is very vocal about interest rates going down. So in case that happens, at least the US interest rates are coming down for sure.
Okay, so that's on the fixed income side. I just want to lay it down because in case we missed it. So having said all of this, you guys are constructive. You believe there could be short covering, led up move, etc., and stuff like that. Policy push is the favored one. Is banks the biggest play, and what else comes as a added package? Andrew spoke about tourism and capex, etc. But what is top draw? I mean, is capex beneficiary the top draw? Are infrastructure stocks the top draw, or is it something else?
See, I think the government's going to do a push in infrastructure, so it has a multiplier effect across many, many different industries. So you've got to be looking at banks in terms of that scenario, plus capital goods companies. But I'm little less on the roads and bridges type of construction, and more on the kind of smart manufacturing, smart office blocks and so forth. So that's kind of the more Siemens type ABBs of this world than the traditional L&Ts and so forth.
Any contra trades? I mean, we've talked about everything that's in the euphoria, but do you think chemicals could be a good space right now? No one's been talking about IT, unfortunately.
Yeah.
It used to be the darling for the last decade or so. Do you feel like these are also some trades and opportunities? Pharma, IT, chemicals?
Well, pharma's had a reasonably good run. I think IT is still your bet on interest rates in the US, right? So, I think they're holding steady because of AI. I think once we pull that trigger in terms of the Fed saying, yes, we're going to reduce interest rates, then that's when I'd be buying IT.
So not yet?
Not yet.
Are you sitting on any cash? Would you sit on any cash if you could at this stage?
A little bit, but not much.
In terms of the next big trigger, and I know we still have June 4th, but you think that budget becomes now very, very key?
Yes.
Because what we saw in the interim budget was a very conscious decision not to go all out, with just a hint of things to come.
Correct.
So, in a sense, does that become even a bigger event than June 4th?
No, June 4, of course, is a different issue altogether. Budget would be, of course, much lower in significance, but important nevertheless. Two things would be important. First, what they lay out in budget. Another minor point would be whether the finance minister continues in a role, or we have because ministries will change.
Is that the buzz?
No, we haven't heard the buzz. I'm just saying from a normal commonsensical perspective. You have ministries.
No, so then honestly, what the swearing in looks like becomes very, very crucial. One cannot assume that just because you have policy continuity, the same party coming into power, that there will not be any kind of shuffle.
No, I disagree with that. I think everything is controlled by the PMO and the,
No, exactly my point. One can't assume that you'll just have everything going on the same way as in Modi 2.0 in terms of the ministers, in terms of who does what.
So the ministers may change, but the policy continuity will be there. And the ministers could be someone who, if for that particular, let's say, department, that particular set of people might like that adjustment. So broader policy continuity is happening, and budget, I think it will be front-loaded. So whatever reforms they have to do, my view is most of it they will try to plan it in either this budget or the one which were happening in 2025.
Yeah, 2 budgets in a spate of 6 months. We have 3 budgets in a spate of 12 months. Now that is as exciting.
One every 5-year cycle sees that coming in. So that's always fun.
Yeah, it is always fun. Okay, my final question at least, and Nandik, you reckon from where we are right now, a lot of people have said that in their notes, private notes, that arguably one of the best wealth creation opportunities is up ahead in the next 3.5-4 years. You reckon that is the case?
I think it's more than that. It's a very long-term cycle. 5 years is a long time, but if they are gaining foothold in the east and the south, at this point of time, at least I don't see what changes can happen in the next 5 years as well. So I think it's a much longer story, and it's a good place to be in.
In terms of also, and I just want to take that point forward, in terms of ministries and the actual work they do and the state center sort of synergy, which is, the big sticking point where it comes. Do you see those challenges also going down over the next 5-year cycle? Because then, of course, we'll wait and see what the assembly election cycle shows us.
There are hardly any states in which opposition is in power. After if Himachal also goes, and let's say in the next cycle, Karnataka elections could be tougher, then,
Maharashtra will have to watch what happens.
Yes, Maharashtra is interesting. Maharashtra will have to watch, but not many states will have a different party in center and a different party in the state. So I don't think that synergy per se is a problem. And there have been chief ministers who have showed willingness to work with the center.
Yeah, no matter what. And GST is a good example of that.
Correct.
GST is a good example of that. More times than not, they have unanimous decisions, and that's a council of finance ministers. What is the list of top 3 reforms that you want to see from a possible 3.0 government, Andrew?
To my mind, there's going to be different reforms. I don't know what's on the government's mind in terms of what big reforms they're thinking. Electricity is probably one area which I think they can still work on. There's a lot of power shortages. I think if you can ease some of that, I think that would be a very, very big, and maybe some incentives towards kind of wind power and so forth. So all of these things I think will play out. It might not be a big policy change, but it might be a policy which changes things over time. A lot quicker than we are today. So those are so more of the same. I mean, why do I need something which is going to change so quickly for the economy?
I'll tell you one thing that they don't want, and one thing that most people don't want: too much of capital tax tinkering, right? Because if that were to happen, I mean, that's one concern that everybody's laid out. That this rally is great, but what if in the budget there is major capital gains tinkering?
But Nandik is still thinking that arbitrage is going to get tinkered with.
Which may not impact any ordinary equity investor's life.
I think the concern. I think the concern
if your STP money's got to sit somewhere. And I think fixed deposits, arbitrage is also short-term money.
No, but if only that were to happen.
long-dated in nature,
but if only that were to happen and no other tinkering with capital gains, short-term, then that's not
maybe it'll be a palatable version because look at what the objective seems to be is that too much retail money in options and, the risks thereon, the froth that everyone keeps talking about.
Actually, that's an important point, guys.
Yeah, how do you control that?
Is there a way to have some differential taxation on F&O or derivatives, and does it harm our market's sentiment on that day, if that were to come?
Yeah, because you want to encourage long term.
It's already full tax.
It's already 39%.
That's what I'm asking. Is there a way to make that even tougher?
You can try and reduce the increased margins, or you can try and do something, but why are you trying to hurt your capital markets in trying to restrict people from investments? And, I keep hearing about all these losses. How do we know how much of this is hedging portfolios?
Yeah.
I don't think that detail is there in my mind to take this view that everyone's losing money. I don't think everyone's losing money.
No, you're right. In fact, a lot of people internationally, while we've been ranting about how FIs have been short, and like Andrew mentioned as well, as part of your IPS, you cannot go into any country, big event, unhedged.
Yeah.
So if your option costs are going to be higher, you may even start discouraging that piece of the pie, which I don't know whether is par for the course at this stage.
Yeah. Well, see, there's no systemic risk as such. There's no systemic risk because everything is taken as margin. And 95% of the volume happens in index derivatives. Hardly 3 or 4%.
And that's Nandik's strength, index derivatives. He gets that piece.
But to finish that point,
yeah.
So you're saying this is not a big concern for the market?
No. So even if they increase margin, I don't think
it's going to discourage. And you have stocks that are volatile, but the margins are anyways much larger, right? So that it's not one fits all for the market. But very quickly, do you see the markets closing June end higher than it is today?
June end is a long
June
time.
27th. Hence, you got to lay the bet.
No, so we are we are focused on the next 36 hours. In the next 36 hours, the way markets are panning out now, I think it will be higher.
Go long on the Nifty.
Yeah.
Well,
right.
Go on.
No, I'm just thanking the gentleman for being here. Thank you so much for being with us today. Really appreciate your time.
Thank you.
And great call, by the way. Pre-election, the gentleman got it right, and hopefully it continues that way. We'll take a very quick break on Talking Point, but Talking Point continues for another half an hour. Up next, on the other side, we speak with Vikas Khemani of Carnelian.
special coverage continues right here on NDTV Profit. We're speaking now with Vikas Khemani, founder of Carnelian Asset Management and Advisors. Vikas, welcome to the show. And, I was recalling our conversation before the elections on what could really change. That was the week when there was so much uncertainty in the market. On hindsight, assuming that the exit polls are in the right direction, one wonders what was causing that uncertainty. Question is, how do you see the rally going forward?
I think, whenever this kind of events are there, now the big uncertainty is over. So, I would say after initial reactions of 1 or 2 days, which partly we have seen today and partly we might see tomorrow, I think things will come back to normalcy, and then we get back to the normal business of looking at the earning cycle and liquidity. So, of course, this is a very, very big vote for continuity, which is what market was looking for. If you see today's letter of Prime Minister Modi is exceptionally well written, like a CEO, which kind of gives a new direction to the whole company or in the country in this case, where he is chalking out that, we need to focus on speed, scale, standards and scope. These are the 4 things and 4 pillars on everything what we have seen. So obviously he's a visionary sort of man, and he is driving towards the country towards a very, very glorious future. And I think so to that extent, the direction and long-term direction of the economy and markets continue to remain very, very positive and bullish. However, in medium and short term, a lot of things play out in the markets, sentiment to news flows, and one has to kind of they will be there. So the way I would think is that, the bullish bull market or the economic growth cycle, or I call it Indian economic miracle, continues on its journey with this vote for continuity. And in times to come, I see a very, very bright future and one of the best wealth creation cycle, what I call Indian economic miracle.
Because you're not restricting this to the next 5 years. I'm guessing saying it for a longer term. Thanks for joining in, Niraj here, of course. Good morning. So that's one question. It's not just the 5-year term that you're talking about, but slightly beyond. And would you reckon that the way to play this is not by betting for the short and the medium term, but the slightly longer term?
Absolutely, Niraj. And I think in all our past interactions also, I have said, continue to believe that, we are in one of the best wealth creation cycle over the next 20 years. And I have never been doubting the, continuity of the current government. I do believe that even in 29, this government will continue. For the simple reason is that, for anybody to lose government, you have to mess up very significantly, or your opposition had to have a very significant value proposition. And I think both in this case are missing, which same, I think, argument I had, 2 months ago, 1 month ago, whenever this question came about. Like, it took 70 years for Congress to mess up for somebody else to come and challenge. Same thing, I think, in my opinion, I see continuity of this government for next 10, 20 years. And if that is the case, then I think, A, you will have continuity. B, I guess, once the momentum builds in your favor, then I think it is very hard to kind of reverse very quickly. So at least I see 5-10 years of till 2035. I see a reasonably good period ahead of us, and in fact, I believe it's a cycle of growth.
Right. Because do you feel like the next couple of years the story will remain with the broader markets, or do you think the leadership will once again shift to the large cap stocks?
These two things do keep happening, and if you look at short-term cycles, there will be periods when mid and small cap will do, there will be periods when large caps will do. But if you look at a 10-year cycle, of course, all caps will do well, but mid and small cap tend to outperform large cap just because of the sheer base effect. And plus, whenever the economic transformation happens, new segments emerge, and they tend to emerge more from mid and small cap than large cap. For example, I think we have seen manufacturing also happening in the country over the last couple of years, and we are seeing many mid and small cap are kind of growing fast, and they will become the future large caps. So in that sense, this transitionary phase of or transformative phase of economy will create many segments and sectors which were not large earlier. Like happened in case of mid-90s, IT and banking became very large in 20-year period. Same way this cycle will have those. So, mid and small cap tend to kind of create slightly larger value in a transformative phase of economy which lasts 8-10 years.
What is the theme, though, that you see? You talked about IT, in the last few years, Vikas. What is the primary theme that you see over here? And is it more of a consumer premiumization kind of play? Do you see a digital infrastructure taking the forefront? What are the exciting spots where you see more value and growth come in?
Way we see is we divide the whole opportunity space into 5 broad buckets: banking and financial services, manufacturing, services, consumption, and infrastructure. And the beauty of the current economic transformation is that each of these bucket has huge opportunities. Now, within those buckets, there will be some fast growing segments, there will be some growing which are kind of stable growing segments. So you got to kind of have a balance of both, according to me. Manufacturing, we have spoken about many times, that is one of the best wealth creation opportunities ahead of us, similar to what IT was in mid-90s. So within that, you will have many segments, sub-segments which will come about. Within consumption, no doubt that premiumization is a theme, which is, and whenever any economy's per capita income goes from $2,500 to $17,000-18,000, people consume more new and better, depending on each class of the household income. And India will see same thing happening. Luxury India has not even started, in my opinion. We will see luxury becoming scale in next 8, 10, 15 years. So I think a lot of themes, new ideas will emerge. Experience-based consumption, likes of tour and travel, and we haven't seen yet becoming large in scale. We will see many opportunities around that. So this is a huge opportunity space on what to look at. Which are the high growth area, which are the stable growth area, but each of these 5 baskets will have a huge growth.
Okay. Vikas, stay on. We're joined by Atul Suri, CEO of Marathon Trends as well, with us, along with Vikas Khemani. And Atul, great having you. Great to have both of you talking about this. Vikas is talking about betting for the long term. This next 5 years is probably not it. The best wealth creation opportunity in front of us. I would love to understand from you, how are you thinking about this possible verdict and how to invest into something like this?
Hi Niraj. Hi Vikas. Nice day to be on there.
I agree completely. Great to have both of you.
Yeah, I know. So I guess I agree that I think it's phenomenal. Continuity is amazing always for markets. And if you look at the world politics, you'll realize that very few countries, hardly if anybody, has this kind of political continuity. If you look at the countries like the US, you really don't know which president to choose from. UK is turning around. So all over the world, you realize that one thing that is missing is political continuity. And India hopefully not only has it for the next 5 years, that would make it 15 years, but more than that. So I agree that we are actually quite lucky that we are at a time and place as investors where there is political continuity. And having been in the markets for 30 years, I've seen how things have turned around. And that sooner or later also has an impact on markets. As I look at it, I find that apart from the day or two movement, which is mainly because of short covering and various positions people have in the F&O space, I think that what's interesting for me is the agenda for the next 125 days. I think Mr. Modi has been really speaking a lot about it. In fact, he chaired a meeting yesterday also. So I would really look at it seriously. Of course, the market's already betting on some themes, but from what I take away are the 4 or 5 big themes that he is betting for the next 5 years. And that for me as an investor will be an opportunity. One is that I think there are some PSU divestments or some deals that have been stuck, especially in the PSU bank space. So I find that PSU banks will continue to have an opportunity. As unwinding happens, a lot of other stocks also get re-rated. So I think PSU banks would be one area which would be very interesting. Second is electrical vehicles and mobility. I think that is something which the document is going to focus on. We are going to see a lot of policy initiatives there. Of course, the cherry would be if Tesla, which has postponed till after elections, may come in. So you never know. That could actually give a very big trigger to the sector or the sentiment that is playing out. I think e-commerce is also an area which requires certain clarification, the area of taxation, etc. That's going to be a very big wealth creating sector. As we all know it, we are big consumers of it. I think that will be the third area where I think there will be some initiatives in the next 125 days. I think digitization of land records. If you look at it in India, real estate, what is really holding it back is a lot of title issues. there's a lot of problem. And for the real estate sector, this could be honestly what
I'll take one
demonetization
minute.
did to the
Right,
financials.
right.
So I think these are the things that I feel I would really play out for. And that's where I see action in the next 125 days.
Atul, I mean, you called this before most. At the end of this year, early end of last year, you talked about how the markets could be looking at a 15 to 20% upside. We're getting close to that from the way things are moving. Would you, now that this event will largely be behind us in 24 hours, would you go back and rejig your portfolio? Would you take a cash call at this stage? We are an expensive market for whatever it's worth. For all arguments for the market, Vikas is very aggressively nodding his head saying, I am not taking a cash call.
I'm laughing actually.
So that question stands for both of you.
And I'm laughing. So I guess both the reactions
So,
are the
okay,
same.
yeah. So no cash calls, 100% invested at this stage. Atul, you go first, Vikas, you go after.
No, I see. I'll tell you, in the larger scheme of things, Samina, what's going to happen is all these cash calls are always going to hurt you. You may look smart and pretty at one point in time, but the next time when you get hurt, like if you take a very big cash call pre-election, you realize that today you're chasing a lot of these stocks 5-7% higher, and it's very difficult as a portfolio manager to really catch up with that kind of underperformance. It leads to immense amount of pressures. So I don't think at this time you need to be a hero and take big cash calls. But now speaking beyond just the elections, what I feel is that if you look at it rally globally in equities is phenomenal. Yes, we are having a good time in India, but if you look at the bigger story that is playing out, that actually you'll find that it's a global equity rally that is happening. And this is also very good because we cannot work in an environment where there is a hostility to that asset class globally. If you look at US, if you look at UK, you look at all European markets, you look at Japan, all are, pushing towards lifetime highs or near lifetime highs. Barring China, I think 90% of equity markets globally are at near lifetime highs. And I guess that itself is a very big contributor. Yes, India would stand out because, as I said, political continuity, a certain market-friendly government, etc., etc. But I feel that even looking beyond just Indian equities or Indian markets or Indian politics, even the world equities are giving you that kind of surge. So I continue to remain very optimistic. Yes, corrections will come. Yes, we will look stupid on some days, but that's okay. I mean, we've spent so many years in the market and look so stupid at times. But in the long run, the wealth has been created by keeping the faith in India. And I do think that we are at a time and space where, I think it's never looked better than what it is right now.
Vikas's answer to the valuation question.
And the cash call.
And the valuation naysayers and the cash call, Vikas, because you vociferously, nodded your head. And that's the constant question, isn't it? That is this now an expensive market?
First of all, this is again, I would say, media narrative getting created that, markets are very expensive all the time, and I think let me answer slightly longer way. See, valuation of any asset class is, and I think biggest argument is that yesterday it was trading at 18 times P, today it is 22, 23 times, hence it is expensive. That is the biggest argument. But one has to understand what goes into valuation. There are only three things which goes into valuation: yield, growth in yield, and discounting rate, right? And same is case with equities. Of any asset class, the same is case with equity. In case of equity, yield is ROE, which is one of the best in the world and one of the best in India, right? At around 15-16% level. Secondly, if you see growth in earning, most pessimist person will tell you 15%, optimist person will tell you 20%. Range is somewhere in between. Which are the markets, how many markets grow at this pace and sustainably for a long period of time? And especially these kind of continuity changes which happens, I think you only see acceleration happening in that, not the deceleration. Thirdly, discounting rate, which in turn is a function of two things, risk-free rate and risk premium. Now, risk-free rate, India's risk-free rate is one of the lowest in, if you compare the difference between 10-year US and 10-year India, 1.5% is lowest ever, right? Our risk premiums are coming down as more and more people, and with this kind of, again, outcomes only comes down. So just again, to give you an idea, everything else remaining same, 2% drop in the discounting rate increases equity valuation by 35% approximately. Now, if this is the case, now you can see whether markets are expensive or not. In fact, I have a very strong thesis that Indian equity markets, will trade even expensive from here. And just to give you another sort of similar comparison, when Japan went through a 25-year bull run, which peaked in 1989, at the peak of the market in 1989, Nikkei traded at 60 times P. And Japanese market was 40% of the world global market cap. So, I mean, if your market is one of the best market around happening in the world, that's when I keep on calling again Indian economic miracle. That this is the great journey India is embarking on, going towards developed nation. India will become $40 trillion GDP or 35, that we will see. But I'm saying the journey of accelerated growth over next 10, 15 years looks pretty feasible. If that is the case, then I think, in my opinion, world will not be able to ignore. So combination of earnings growth and liquidity, both will keep on re-rating the market is my strong hypothesis. Hence, I keep on telling people, when you guys call it expensive market, a lot of people get scared, and that impacts their asset allocation. Yes, short term, like Atul was saying, market might correct, possibly. That will happen. That has happened in the past, will happen in the past. But from a long-term asset allocation perspective, I don't think Indian markets are expensive, and one should continue to remain invested into Indian equities.
Defense, Vikas. We call people, the people give the answer about whether it's expensive or cheap. So I'm glad that we got the two best men to talk about this answer today. That will be the narrative from Vikas Khemani and Atul Suri, at least, that this market is not expensive.
And I think it's a more specific question, right? For every stock, every company, every price valuation. Of course, when you come to Indian markets overall, then the upside is something that has been underestimated by the world.
Yeah, but also this whole idea of 22 times is India more expensive than the rest of the world. Sure, it may look that, but the earnings growth is kind of fructifying for that. But, I understand we've run our time out with the guys. Atul Suri at 5 minutes, Vikas gave us 10. Lovely having both of you today. Thank you so much. Atul, I look forward to the longer-term conversation with you as well very, very shortly. And Vikas, thank you so much for your time today. Really appreciate both these answers.
Yeah.
Thank you very much.
And we'll take a very short break. On the other side, we are going into the details of the exit polls. Remember, the result still has to come tomorrow. The market is celebrating. Amitabh Tiwari and Shankar Iyer join us on the other side on what the poll of polls is telling us and what is the kind of numbers we could see on June 4th. Stay tuned. We're watching the election trade, and while markets are completely celebrating what has come out in the exit polls, it's important to understand the poll of polls and their outcome in a little more detail. Amitabh Tiwari and Shankar Iyer are now joining us to break it all down. Welcome to both of you, and great to speak with you this morning, which is really very exciting morning. Shankar, let me start with your take with the poll of poll numbers that we've seen. Now, most of the commentary, at least to everyone that we've been speaking since this morning, is that they underestimated the numbers 2014 and 2019. Should we assume they're doing the same? I'm talking about the average polls in 2024 as well.
Well, you guys are market people, so you would understand the play of momentum in these things. So the momentum could have swung either ways. I think in 2019, people sort of miscalculated the effect of the national security question